Hey guys, welcome you all to a new video. This is Ganesh Bharadwaj. So recently I had uploaded two videos on costing marathon by way of part 1 and part 2, wherein I had handpicked 7 to 8 chapters from our fast track course and I had just uploaded it, compiled it as a marathon and I had given it to you. Now I've been getting a lot of messages from students of late asking me to do revision of this chapter called standard costing because many students feel that standard costing is the most difficult chapter in costing because there are a lot of formulas to remember, and of course time and again it gets tested for 10 marks in every single attempt. On an average it just comes for 10 marks. So yes, I've heard you guys, so this is going to be the much weighted video for you all because I've decided to upload the entire chapter of standard costing that was taken in our fast track. So what you're going to see right now is this entire chapter of standard costing that was taken in our fast track course, right? So this is going to be approximately for about 4 hours. And what can you expect out of this video? So in this 4 hours, so we are going to cover the entire chapter of standard costing. And to talk about this chapter, standard costing, so it generally gets tested for 10 marks in every single attempt. So almost all attempts, the last 5 attempts, if you see, yes, almost every attempt for 10 marks, this chapter comes in, right? Now, one more important thing is this chapter has a lot of formulas, as in you have something called as material price variance, usage variance, then you have fixed over its volume variance. You have a lot of formulas. Now, the biggest problem is generally students mug up these formulas, and in the exam what the institute does is they actually test these concepts logically on conceptual basis, and since they have mugged up, they are not able to answer these questions. Now if you are one such student who has mugged up this standard costing till now and finds it difficult, I'm telling you this video is definitely for you, because just spend the next 4 hours in this particular video and I'm sure you are going to see the magic by yourself, because this chapter doesn't require mugging up of anything. It is filled with logics. So if you know the formula, if you know the logic behind every formula, you can write the formula by yourself. You need not mug it up. You need not mug it up. It's going to be such an easy cakewalk for you. Are you clear with this? And I'm telling you with utmost guarantee that once you watch this video for this 4 hours, you watch this entire video, and then you ask yourself, you open the book, ask your friend to ask you any formula in this chapter. I can bet you that you can tell this formula by yourself, not by mugging up, but conceptually you can tell the reason why this formula is coming like this. So that is the level of conceptual clarity that we will be seeing in this particular video. And sir, who should watch this video? Like, so I've already done standard costing before. So will this video be helpful for me? Absolutely. You can revise the standard costing along with me. Sir, I know nothing about standard costing. This is the first time I'm going to learn. Is this video for me? Absolutely yes, because we will be starting from the scratch, and all the 4 variances, that is material cost variances, labor cost variances, variable overhead cost variances, and fixed overhead cost variances, all the 4 variances will be covered, and we will be doing about 4 numerical problems that are comprehensive and that covers almost all the concepts in this particular chapter. So that is what it is right now, and I'm telling you that it will open you up to a whole new perspective of looking at this chapter, and this chapter can definitely get you 10 marks in your upcoming exam, right? So on that note, I'm leaving with this particular thought. So let's deep dive into this beautiful chapter called as standard costing. And one more important thing, guys. So throughout the course of this particular video, I would have explained the concepts and numerical problems from our fast track course material, that is costing fast track course material. So if you wish to download that, yes, you can join our Telegram channel. The link of which is given below in the description. So you can join the Telegram channel and you can download this entire costing fast track course material, not just for this particular chapter. That's a book wherein I've compiled this fast track course material for all the chapters. So you can download it free of cost from our Telegram channel. So this Telegram channel is something that I use to share all academic related updates on the subjects which I handle, which is costing and FM, right? And also in this Telegram channel, you will be finding For our subject costing, for every single chapter, I have compiled the past exam questions and past RTP questions with solutions chapter wise, so that it is easy for you to find all these questions in a single place. That will help you to revise and practice various different kinds of questions that can come for your exams. Are you clear with this? So with this, let's get into this beautiful chapter called as standard costing. Standard costing. Now guys, first of all, before we enter into the chapter or what is there in the study material, what is there from the exam point of view, as usual, we will try to understand first of all why you are studying this chapter. Only if you know that, you will understand the reason why you are doing the sums. What many people do is this there for exam, introduction there for exam? No. So directly I will go to the question. It doesn't work that way. Spend more time here, lesser time you will spend there. Smart working. Do that. Fine. Now, let me just take a black ink. Fine. Now, and guys, please catch up running notes. These things are not there in your material that I've given you. In your material, I've just given the formulas. That's all I've given you. Logic, everything, background, everything happens only in the classroom. Only in the classroom. That's why you're coming here and spending your time. Please write running notes. Take running notes. Okay? Fine. Now, first of all, our subject. What's our subject? No, it's not costing. It's cost and management accounting. Correct? There are two words here. Cost and management accounting. Now, our subject, cost and management accounting, put together, has three objectives in total. It has three objectives in total. I'm not talking about standard costing. I'm talking about cost and management accounting. This subject as a whole, it has three objectives. It helps us to achieve three objectives. Objective number one is stock valuation and profit computation. Stock valuation and profit computation. Objective number two is decision making. Objective number two is decision making. And objective number three is called as control. Objective number three is called as control. Objective number three is called as control. Now, recall, I think on the first day or day before yesterday, I told you that our subject is unstructured. I told you. Unstructured doesn't mean that it's not organized properly. No, that's not the meaning. Now, if you take your financial accounts, you know that the ultimate objective is what? To prepare the financial statements. That's all, no? I'm not undermining the subject. The subject has this objective. That subject is meant for that. Correct or not? Financial accounts is meant for preparing the financial statements for the end users. Now, our subject doesn't have one purpose like that. Our subject has three purposes. One purpose is stock valuation and profit computation. One purpose is decision making. The other purpose is control. Now, if you see, we have a lot of chapters in our subject. Certain chapters help you achieve the objective of stock valuation and profit computation. Example of chapters falling under this category is cost sheet. Overheads chapter, we had to value every unit of the product. Correct? Only if you do that, you can compute the profit, segregate your manufacturing cost into cost of goods sold, closing stock and all. Correct or not? So these chapters, your cost accounting systems, these chapters help achieve your objective number A. Objective number A. Objective number A. Now, there are certain chapters that deal with decision making. Example, marginal costing. Chapters like marginal costing. What these chapters will tell you is, in this scenario, what should I do? Shut down or continue or something like that. There will be a lot of decisions, indifference point, break-even point, decision-making element. Here, your product cost, period cost and all will not come. There, it's completely different logic. Why? We are on a different objective altogether. There you will be talking about variable cost, fixed cost. You will not be talking about product cost, period cost. Why? Because product cost, period cost classification is relevant only for objective A. Correct? So chapters that are achieving objective A will only have this manufacturing cost, non-manufacturing cost, or in other words, prime cost, overheads, your AOH, SOH and all these things will be covered only in chapters that are achieving objective A. Chapters that are achieving objective B of decision making, there the cost classification will be looked at only from the perspective of variable cost, fixed cost and so on. Example is marginal costing, and there is also a concept called as flexible budget. Flexible budget, that is also in this decision making area only. Now, there are another set of chapters, or maybe very few chapters, that help you achieve the area of the objective of control. And one such important chapter that helps you achieve the objective of control is only your standard costing. And I'll tell you how it helps you achieve the objective of control. So now, first thing, why am I giving this background? Come out of that product cost, period cost, that classification, you just come out of it. Why did we study this product cost, period cost? That product cost, period cost, that concept we learned for the purpose of achieving the objective of stock valuation and profit computation. Right now, standard costing talks about a different objective altogether. So right now, I am not going to be talking about your manufacturing overheads, selling overheads, or prime cost, or material, labor. No, I am not even bothered about that type of classification. What am I bothered about? I am bothered about controlling. How am I going to control? So this has to be looked at from a different perspective, not from the same perspective from which you looked at the cost sheet chapter. Are you clear with this? First, are you clear with this? Many students, this is where they make a mistake. They continue. They think it's all an extension. No, our subject has multiple objectives. In fact, if you take chapter like material cost, that chapter has many concepts inside it. Certain concepts helps you achieve stock valuation, profit computation. Yes, for example, calculation of your material cost, computing, arriving at the landed cost of material, that helps you achieve this objective. Certain areas like economic order quantity, that helps you achieve decision making. How many quantity should I order every time? Certain areas like stock levels, maximum stock, minimum stock, reorder level, that helps you achieve the control objective. So basically, concept wise, you should know the objective. Only if you know the objective, you will know from which viewpoint you should look at it. Are you clear with this? This is where many students are lagging, is what I feel in my past experience. What they think is, no, all the chapters should have been looked at from the same perspective. No, that's very much applicable for your financial accounts, not in your cost and management accounting. And in fact, what is the name of a subject? Cost and management accounting. This objective A is there, no? That is stock valuation and profit computation. This comes under cost accounting. And the other two objectives put together, decision making and control, this comes under management accounting. Are you clear with this? Are you clear with this? So ideally, this is how it is structured. First, you should know this. Why am I telling it right now? Because till now we saw all the classification only from the perspective of objective A. Now, since we are moving to another objective, I want to tell you that this is how the subject has been designed. First to know this. Before you enter the subject, actually you should know this. Are you clear with this? So that's why I plan to discuss this right now. Are you clear with this? So come out of that cost sheet format and all. Come out of that and look at it differently. Fine. Have an open mind and look at it differently. Are you clear with this? Is everyone clear with this, guys? Fine. So now let's get started. Now, has everyone noted this down? Yes? I hope everyone has noted this down. Fine. Now, sir, you said this subject, this chapter, standard costing, helps you achieve the objective of control. Correct? How exactly does that happen? Now, you tell me, guys, in every company, what they do is, first they set one target. Correct? They set one target for all their employees. Correct? Then what they do is, they let the employees do the work, actual execution. Correct or not? Then what they do, at the end of the period, they will evaluate the performance with the targets that is set. For example, you should have sold 100 units. You have sold only 80 units. So you are underperforming. A salesman B should have sold 100 units, but he has actually sold 120 units. He has overperformed and all. Correct or not? So what happens is, at the beginning of the period, everyone sets a target. Correct? At the end of the period, the actual performance gets compared with the target. Correct or not? Based on this, will the target and actual be the same every time? There will be a difference. The actuals will vary from the target. That difference is called as variance. V-A-R-I-A-N-C-E. Variance. What do you mean by a variance? The difference between whatever is the target and the actual. Correct or not? Now, if this difference helps you increase your profit,
Or let's say if the person has done a proper work, if he is super efficient, that's called as a favorable variance. That's called as a favorable variance. And if that person was inefficient, it is called as an adverse variance. So this variance can either be beneficial for you or it cannot be beneficial for you. If it is going to be beneficial, it's going to be called as a favorable variance. If it is not beneficial, it's going to be called as an adverse variance. Are you clear with this? So basically, control involves establishing standards. First you set the standards, then you evaluate the performance. Then you analyze the variance, and then what you do is, if someone has performed better, you will reward him, bonus. If someone has not performed better, you will take some corrective actions there. Are you clear with this? So 4 steps are there here. Generally, I'm telling you, so establishing standards, and then evaluating the performance, then analyzing the variances, and then you are rewarding or taking corrective actions as the case may be. When will you reward? Favorable variance. When will you take corrective action? Adverse variance. These 4 steps are involved in general. Are you clear with this? So this is how controlling happens. I am enhancing control over the affairs of my company. Correct or not? Does it make sense, guys? Does it make sense? Fine. Now, at the beginning of every period, I told you in our subject, period can be 1 month, 1 week, 1 day, whatever it is. Yes, even 1 year you can have. Whatever it is you want, the company can decide. Why? Because that is their own internal matter. Correct? They are not going to publish the costing results. Have you ever seen companies publishing the costing P&L and all? No. In fact, the costing data is there, no? It's very, very sensitive information. It's a confidential information. If someone has access to your cost sheet, they will clearly know what is the cost you are having, what is the money you are making. Correct or not? Will anyone let the competitors know? Even your competitors are watching. Will anyone do that? It's a very sensitive information. No one will let that. Then, sir, in financial accounts, sir, in your financial accounts, we have this P&L account. That's for presentation. At the back end, you won't know which unit, how much is the profit you make. If you see in textile industries, you will cry. Literally, you will cry. How much amount of money they make, you have absolutely no clue. This one shirt for manufacturing, it wouldn't have costed them more than 100 rupees, but they will sell it for 1000 rupees, at least minimum, I'm telling you. If it is branded and all, 2000, 3000. In fact, nowadays there is one black color shirt coming with golden color thing written on it that they are selling it for 30,000, 35,000. I don't know whatever that is. Fine, okay. So look at this. We don't look for quality, we look for brand. So this and all they are doing actually. So assume that company gives the cost sheet. Cost will be in single figure. Selling price and profit will be alone in multiple 4 digits or 5 digits. Just imagine, will you even feel like getting inside the company, going there and buy? Still people will buy and all. Of course, we have again the second hand market and all where they make the first copy and sell. That is different. But whatever it is, coming back, guys, come back. Fine. Now, at the beginning, please listen carefully. At the beginning of the period, every company prepares a budget. Yes or no? Fine. Now, when they prepare the budget, they will estimate that this is going to be my revenue for the year. This is going to be my cost for the year. Correct? And they will arrive at something called as budgeted profit. Correct or not? Now, with this budget, when this happens, before or after the year? Obviously, before the start of the period. Now, what happens? They will start the year. Their employees will work and all. At the end of the period, they will see what is the actual sales they have made, what is the actual cost they have incurred, and find out the actual profit. Correct or not? Guys, everyone, correct or not? Yes. Now, you tell me, will the budgeted profit be equal to actual profit? Mostly, 99.99%, it will never match. You can't predict to the point, obviously. Correct? There will be a difference between the budgeted profit and your actual profit. Correct or not? This is called as profit variance. What do you mean by a profit variance? Nothing. Variation in the profit. That's all. They are giving some jargon. Don't think that it's some complicated thing and all. Difference in profit. That's all. It's called as a profit variance. Are you clear with this? Let's say, guys, let's say the company budgeted 100 crores of profit. but they actually got only 80 crores of profit. Now, this profit variance is adverse or favorable? Adverse or favorable? Budgeted actuals. If the budget was 100, actual profit is only 80. Favorable, adverse. Favorable, adverse. Adverse. Why is it adverse? Any variance that reduces your profit is actually an adverse variance, correct? Let's take it the other way around. They budgeted only 80 crores, but actually they achieved 100 crores of profit. Is this an adverse or favorable? Adverse or favorable? Favorable. Correct? Correct? Now there is a profit variance. It can either be an adverse variance or may actual favorable variance. Correct or not? Correct or not? Now, if I prepare this report and say, sir, we budgeted 100, but we have actually got only 80. Now, will the board of directors be happy? First, they will ask, where have I gone wrong? They will ask. They will start analyzing for the reasons, no? They will start analyzing for I am not bothered. I know on the face of it itself, I know that we have made lesser profit or we have made more profit, whatever it is. But I want to know the reason why actually there is a variance in my profit. Will anyone just leave with that variance? Okay, this is the amount. Okay, leave. Will anyone do that? Or they will dig inside it? They will only dig inside it, because if there is a mistake, it has to be corrected. If they are doing somewhere well, that needs to be maintained. Whatever it is, they need to know it. Correct or not? Correct or not? Now, this profit, the budgeted profit and actual profit, there is a difference. The profit can vary broadly because of two reasons. One, variance in the sales side, and the other one is the variance in the cost side. Agreeing with me or not? Agreeing with me or not? There can either be a variance in the sales side, or there can be a variance in cost side, or there can be a variance in both the sides. Yes or no? Yes or no? Yes or no? Correct or not? Yes. Profit is a function of revenue as well as cost. So when my profit is changing, it could be because of changes in the sales side or changes in the cost side. Correct, guys? Correct, guys? Correct, guys? Now, just tell me. Example, they had budgeted a sale of 100 crores. Okay, but they have actually got a sale of 120 crores. Is this a favorable or an adverse variance? Favorable, adverse variance. Favorable, adverse. Favorable, adverse. It's obviously a favorable variance. I budgeted to sell only 100, but now I am able to achieve a target of 120. So on the sales side, if your actuals is more than your targets, it is actually a favorable variance. Don't think that plus, minus and all, don't go by the symbol. People again, they go by symbols. Students go by symbols. They will say if it is minus, adverse. Plus means it means favorable. No, wrong. Don't ever go by that. Don't ever go by that. If I increase my sale, my profit will increase. Yes, ultimately, if it increases my profit, it means it's a favorable variance. As simple as that. Are you clear with this? Are you all clear with this, guys? Are you all clear with this? Let's assume the same thing on the cost side. They had budgeted a cost of 100 crores, but they've actually incurred a cost of 120 crores. Is this a favorable or an adverse variance? Favorable or an adverse? Obviously an adverse. I was supposed to incur only 100, but I have incurred 120. So 20 I have incurred more. Because of more cost, your profit will reduce. And whatever goes and reduces your profit is called as an adverse variance. Correct or not? So don't go by the symbol 120 minus 100. So it is positive, negative. No. What do you mean by a favorable variance? It should increase your profitability. What is an adverse variance? If it reduces your profitability, it's called as an adverse variance. Are you clear with this? Are you clear with this? So the profit variance can happen because of variances on the sales side or because of variances in the cost side. Are you clear with this? Now, sorry? Yeah. So now on the cost side, you can have, if you further dig it, there are 4 different types of costs. The nature of cost where you can actually go wrong. Obviously, you guys know this. Material cost, labor cost, variable overheads and fixed overheads. Here, product costs, period costs, that classification, forget it. That's why I said park it aside. Overall, what are the different type of costs that a company can incur? They are broadly classifying it into 4. Material, labor, variable overheads and fixed overheads. These are the 4 different costs that a company can have. Are you clear with this? Fine. Now, if I further say, sir, cost variance, that there is a total of 20 crores. Next question is, where exactly, in which area have you gone wrong? They will ask, no, whether material cost was more or labor cost was more or variable overheads or fixed overheads. This has to be deep dived once again. Correct or not, guys? Correct or not, guys? So that is why they are further having this classification. Are you clear with this? Are you clear with this? And for your syllabus, CA intermediate syllabus, only the cost side variances are applicable. Only 4 different types of variances are applicable. Sales side variances are not applicable. And basically the overall objective of this chapter ideally is to reconcile your budgeted profit with your actual profit using all these variances. But that reconciliation statement is also not there for a CA intermediate. It's there only in your CA final in a paper called SCMP, Strategic Cost Management and Performance Evaluation. Are you clear with this? Basically, sir, what is there for my exam? Only the cost side variances. Are you clear with this? You only have 4 different types of variances: material cost variances, labor cost variances, variable overhead cost variances, and fixed overhead cost variances. Are you clear with this? Only this much, and it's not lengthy. It's not lengthy. Trust me, it's not lengthy. If you know the concept, hit the nail on its head, you will get it. As simple as that. The problem is we don't spend time on the concept. The more you spend time on the concept, any kind of questions you can crack. That's what I'm telling you once again. Fine. So we have what? Only the cost side variances. That is the 4 different types of variances: material, labor, variable overheads, and fixed overheads variances. Are you clear with this? So this is about the introduction to this particular chapter. Are you all understanding now why we are doing this chapter? Are you all understanding now why we are doing this chapter? Yes. First you should know this. Only then we can proceed forward. Clear with this, guys? Clear with this, guys? Fine. Now, let's go to the next area of this chapter. This is also the introduction only. After this, we will jump to first type of variance called as material cost variance. Fine, we will finish it quickly. I'm telling you, you yourself will know that, okay, only this much, you will feel. Because this chapter actually has only this much. The problem is we are again and again, somehow our mind is tied up with the formulas. There is no formula in this chapter. It's loaded with concepts. If you know the concept, you can crack it that easily. In your left hand, you can finish it. That's simple. Standard costing is simple. Trust me, it's very simple. Fine. Now, let's go to the next area. Let's go to the next segment. Now, before we enter into each of these 4 variances, we'll be doing only these 4 variances and closing off. That's all is the chapter. Even if you want to go to your study material and see only these 4 variances are there. Fine. Now, what are the different variances that we have? We will move to that later. But before that, you should know one very important concept called as standard cost. What is the name of the subject, chapter? Standard costing. So what do you mean by standard cost? You need to necessarily know this. Without this, you can't move into the next segment. So this is very important. So first we saw why we are reading this chapter. Second, we are seeing now what do you mean by a standard cost. Once we do these two, the 4 variances that we will do, more time we will be spending in material cost variances. Once we spend that, automatically labor and variable overheads will be over. Then fixed overhead cost variance alone, I will have to do something separately. After that, the chapter itself is over. That's all it is. Know the concept. That's all. No one can touch you. Fine. Now, standard cost. What do you mean by standard cost? Now, let me not give you any theoretical meaning or definition. Instead, what I will do is, I'll give you an example. Fine. Now, let's say I'm budgeting a total cost of, say, 1 lakh rupees. I'm budgeting a total cost of 1 lakh rupees, and I'm budgeting units. The budgeted units are, let us say, 10,000 units. 10,000 units. And now let's say the actual cost, the actual cost is, let's say, rupees 96,000, and the actual units is equal to 8,000 units. Fine. Now the budgeted cost is 1 lakh, budget units is 10,000. The actual cost is 96,000, actual units is 8,000 units. Clear with this? Now, can I say that, look, this guy was supposed to spend 1 lakh rupees, he has actually spent only 96,000. So 4,000 rupees he has saved for the company. Correct or not? Correct or not? Correct or not? Correct or not? Huh? Correct or not? Correct or not? Can you compare this 1 lakh with 96,000? Can you compare this 1 lakh with 96,000? Can you compare this 1 lakh with 96,000? Hell no. Definitely not. Definitely not. Why? This 1 lakh is for 10,000 units, and this 96,000 this fellow has incurred for just 8,000 units. Are these two comparable? Are these two comparable? Definitely not. Definitely not. If you are looking at his efficiency, if you want to gauge his performance, can you compare the budget with actuals? Always remember, the budget can never be compared with actual. Reason, budget is meant for a different volume level. Actual is meant for a different volume level. So now what will you do? What I will do is, I will first try to find out the standard cost per unit. Per unit, what is the cost he is allowed to spend? What is the cost he is allowed to spend? 10 rupees per unit, correct? Now what I will do, you were allowed to spend 10 rupees per unit. For the actual output that you have manufactured, what should have been the cost you are allowed to spend? So can I say in between அந்த ஒரு படத்தை சொல்லலாம், குறுக்க இந்த கௌசிக் வந்தா அப்படிங்கிற மாதிரி, in between this standard cost comes in. This standard cost comes in, and then it says that, look, you can't compare this 1 lakh with 96,000. What you do is, from the budget data, you pick the per unit cost that is allowed and multiply it with the actual number of units that has been produced. So 10 into 8,000 units. Now how much is this? Rupees 80,000. Now this 80,000 and 96,000 are comparable. Is this 80,000 and 96,000 are comparable? Yes, sir. Why? Both are for the same output level. Correct or not? Correct or not? So always remember, you can only compare your standard cost with your actual cost. That's why the name of the chapter is standard costing, not budget costing. Budget separate chapter is there. Budget costing, this chapter's name is called as standard costing. The reason is, what is the beauty of the standard? What is the beauty of the standard? It partakes one character from the budgeted data and it marries itself with an actual data. Correct or not? From the actual, for the actual output, output, I actually don't call it as budgeted cost per unit. Budgeted cost per unit, we don't call it. Instead, we call it as standard cost per unit. When you are making it per unit, it's always called as standard cost per unit. Generally, people don't use the wording. People don't use the word as budgeted cost per unit. If you are representing some budget as per unit, they generally use the language standard cost per unit. So, from the budget, I take the standard cost per unit, and for the actual output level, if I multiply, I will know what is the cost that is allowed. Are you clear with this? So, in other words, can I say this 1,80,000 and 96,000? If I say this 1 lakh is nothing but cost planned, correct or not? Correct or not? This 96,000 is nothing but cost incurred, correct? And what is this 80,000? Cost allowed, correct or not? And it only makes sense to compare my cost allowed with cost incurred, correct guys? Are you all understanding this? Are you all understanding this? Online folks, are you all understanding this? Fine, right? Now, please listen. Now, what I was telling you was, now the company had budgeted to incur 1 lakh rupees. Okay, they had budgeted to incur 1 lakh rupees, and where is this coming from? I don't even know. Okay, fine. The company had budgeted to incur 1 lakh rupees, and the budgeted units was 10,000. So for 10,000 units, you were allowed to spend how much? 1 lakh rupees. Actually, this guy has produced only 8,000 units, for which he has actually spent 96,000 rupees. Correct or not? Now my question is, can you compare this 1 lakh with 96,000 and say that this guy has saved 4,000 rupees? No. Why? Because this 1 lakh pertains to a different output level. It's for 10,000 units. This 96,000 pertains to a different output level, 8,000. Now, when I am comparing my actuals, what I should do is, for the actual output, that is, keep your actual output as the base. It's very important. Keep your actual output as the base. For the actual output, how much should have been the cost you should have incurred? That is called a standard cost. And that only you can compare with your actual cost. Now, how can I do that, sir? How can I find out my standard cost? From the budget, you can find out what is the standard cost per unit. That is, what is the cost allowed per unit. Now, as per the company's intention, you can easily make out that they are letting you to spend 10 rupees per unit. Correct or not? Correct or not? Now, you have actually produced how many units? How many units? Actually produced 8,000 units. So, which means 10 into 8,000 is 80,000 is the cost you should have incurred. That is only called as a standard cost. And now this 80,000 can be compared with 96,000. Actually seeing this guy is inefficient. This guy is inefficient. He should have spent only 80,000. He has spent 96,000. There is an adverse variance to the extent of 16,000. Are you clear with this? Are you clear with this? Now are you able to understand? Is everyone able to understand this? Guys, if anyone is not able to understand, please ask me then and there. Please ask me then and there. This concept is very important because the entire chapter is built around this concept. The entire chapter is built around this concept. Are you all getting it? Is everyone understanding this? Fine. So basically, to put it short, you can't compare your budgets with your actual. From the budget, you calculate the cost per unit. It's called a standard cost per unit and apply it on the actual output. For the actual output, how much should have been the cost you were allowed to incur? That compare it to the actual. Now it makes sense. Now I know whether you are performing well or not. Correct or not? Are you clear with this? Is everyone clear with this? Now, 1 minute. Now, a very important thing is the concept of standard is not just applicable for cost. It can be applied on kgs also. It can be applied on units. It can be applied on hours. What are you saying, sir? I don't understand. Let me give you an example. Let's say the budget says that you were allowed to take 1000 hours. You are allowed to take 100 hours. You are allowed to take 100 hours to produce, let's say 10 units. But actually what happened, the people in the company, they have taken 90 hours and they have produced how many units? Let's say 8 units. They have produced how much? 8 units. Now you tell me, can I say that, look, you were allowed 100 hours, but you have actually taken only 90 hours. So very good people, you have been super efficient. Can I say this? No. Why? Because 100 hours was allowed for how many units? 10 units, which means per unit you are allowed how many hours? 10 hours per unit, correct or not? So can I say the standard hours allowed will be 10 hours per unit into the actual quantity that you have made, 8 units. Can I say that you were supposed to take only 80 hours? Correct? Whereas you have actually taken 90 hours, which means 10 hours you have taken more. That's an adverse because for 10 hours I am paying more cost. Correct or not? This is what I said. The concept of standard need not apply only on cost. You can apply it on anything you want. You can apply it on hours. You can apply it on kgs of raw material. You were allowed to use 100 kgs of raw material. You have used 200 kgs of raw material. 100 kg is more. That is an adverse variance. Correct or not? Correct or not? Are you clear with this? So the concept of standard can be applied on cost, or it can be applied on rupees, it can be applied on hours or kgs or units, anything you want you can do. Basically what you are doing, you are keeping the actual quantity as the base. For the actual performance that you have done, what should have been the target versus what is the actual that has happened. Are you clear with this? And how will I set the standard? I will take the cost per unit or the hours allowed per unit from my budget and I will apply it on the actual quantity produced. I will know what is the amount that you should have spent or what is the hours that you should have taken versus what is the amount that you have actually spent or what is the hours that you have actually spent. Are you clear with this? Is this understandable to everyone, guys? Is this understandable to everyone? You all are understanding this? Sure? Is everyone understanding this? Now, with this context in the mind, let's get started. Let's get started with the first variance. What is the first cost variance? Material cost variance. So, as the name suggests, what you need to do. Now, we are talking only about, so there are 4 different types of cost, I told you. Now, in that material cost variance, we'll focus only on the variances inside material cost. Correct or not? Correct or not? We are talking only about the variance happening inside material cost. I am not bothered about labor, overheads and all. That is taken care of by separate people. First, when I am in material cost variance, I am focused only on my variances inside my material cost. Are you clear with this? Are you clear with this? Shall we get started with this? Shall we get started with this? Fine. Now, so 1, material cost variance. Material cost variance. Now, what do they say? What do they say here? Now, they are saying that material cost variance, the formula that they are giving us, standard price into standard quantity minus actual price into actual quantity. Basically what this means is standard material cost minus actual material cost. Correct only no? Correct only no? See, in our subject, in our chapter, what we will be compare? Budget with actual or standard with actual? Standard. So it makes sense only to compare my standard material cost with my actual material cost. Correct or not? Correct or not? Correct or not? Is everyone understanding this? Is everyone understanding this? Now, sir, you are writing SP into SQ, AP, AQ. What is all these things, sir? I will give you an example. I will give you an example. With that we will understand. With that we will understand, and then we will move to the other limbs of this area. Are you clear with this? Shall we do that? Shall we do that? Fine. Now just take down this example. Just take down this example. Please take down this example. Let's say they are giving standard price per kg of raw material. Obviously, when I say per kg, it's per raw material. Rupees 10 per kg. Then let us say raw material allowed per unit of Fg. So for every unit of Fg, how many kgs of raw material you can consume? Let's say 2 kgs. Okay, you are allowed for every unit of Fg, for 1 unit of output, you can consume 2 kgs of raw material. This is what? This is allowed. Where did we get all these things from? Budget. From budgets we got it. Okay, fine. Now what is the actual performance? Actual output, they have given it as 100 units. 100 units means what? 100 units means what? Fg or RM? Fg or RM? They have produced actually 100 units of Fg. Correct or not? Output. Raw material is input only, no? Correct or not? And raw material is in kgs. Correct. I'm saying units. It means I'm talking about an Fg. Are you clear with this? This is an example. This is an example. Actual output. Then let us say raw material consumed. Actuals. Raw material consumed. Let us say is 220 kgs. 220 kgs. And let us say the actual price paid. The actual price paid per kg was rupees 9. Rupees 9 per kg. This is the data available. Quickly note it down. Guys, quickly note it down. So standard price per kg is 10 rupees. Raw materials allowed for every unit of output is 2 kgs. Actual output is 100 kgs. Raw material consumed is 220 kgs. And actual price paid per kg is 9 rupees. Clear? We are talking about what cost? Material cost. Clear? Now, can anyone tell me what is the actual raw material cost incurred in this sum? Can anyone tell me what is the actual raw material cost incurred in this sum? Just tell me this into this. That will be enough. Guys, guys, please answer no. What is the actual raw material cost incurred? See, if you are wrong, don't worry. Have the courage to open up. What into what? 220 kgs into 9 per kg. Correct or not? Actually, I have consumed 220 kgs. Every kg I have purchased at 9 rupees. Correct or not? This is my actual material cost incurred. That's why they are saying the actual material cost is actual price into actual quantity of raw material. AP into AQ stands for actual price into actual quantity. Correct or not? Now you guys tell me, I have actually produced how many units? Guys, I have actually produced how many units? Let me take another ink. Yes, I have actually produced how many units? 100 units. For each of these 100 units, I should have consumed how many kgs of raw material? 2 kgs. So can I say the total quantity of raw material that I should have consumed is how much? 200 kgs. That is what is standard quantity. And each of these standard quantity, each of these 200 kgs, I should have purchased at what rate? 10. Correct or not? So can I say 10 into 200, 10 into 200, 2000 rupees is the standard cost allowed. Correct or not? Correct or not? But actual cost that I have actually incurred is 9 rupees into 220 kgs. Correct, guys? How much is this? 1980. Correct? So I should have incurred 2000. I have only incurred 9980. So 20 rupees is what? Adverse favorable. I have incurred a lesser cost. It's a favorable variance. So basically, can I say that material cost is nothing but standard material cost variance is nothing but standard material cost minus actual material cost. Correct or not? Correct or not, guys? Guys, answer. Yes, you're getting it. Now, what do you mean by a standard? How will you compute the standard material cost? The standard price into, price means standard price per kg of raw material into standard quantity of raw material. What do you mean by standard quantity of raw material? For the actual production, how many kgs of raw material you should have consumed? Always remember, this is very, very, very important. Actual output is very important because standard is based on actual. For the actual performance, what should have been consumed? Are you clear with this? Are you clear with this? So for me to actually produce 100 units, I should have consumed how much? How much? 2 kgs each, which brings me 200 kgs. Correct or not? So to put it here, can I say material cost variance is equal to standard price into standard quantity minus actual price into actual quantity. This is nothing but, what's your standard price? Guys, what's your standard price? Rupees 10. What's your standard quantity? 200 kgs. How did you get this? 2 into 100. Correct? For the actual production, what could be your total material consumption? Minus actual price is how much? I paid 9 rupees for every kg that I bought. But how many kgs I bought? 220 kgs. So now this is nothing but rupees 2000 minus rupees how much? 1980. So that gives me how much? A favorable variance of rupees 20. Correct or not? Correct or not? What happened? Yeah, wait, I will say, we'll come to that. Overall material cost, what is the material cost variance? 20 rupees. Correct or not? Correct or not? Guys, everyone, is everyone understanding till this? Is everyone understanding till this? Is everyone understanding till this? Very good. Very good. Now, just assume, put yourself in the shoes of the MD. They are saying, sir, material cost variance 20 rupees favorable. Now, I am saying, oh, very good, 20 rupees is favorable. So, which fellow is responsible for this? I will ask no, because if someone is really good at it, I should incentivize him. That's the objective. Now, there is no one person alone that is involved in this material consumption. There are broadly 2 people involved in this material consumption. One, the production manager. He is responsible for what? Actually consuming the material. Correct? And there is another person called as the purchase manager. He is responsible for what? Negotiating the rate, finalizing the seller. Correct or not? His work stops there. He only finalizes what? The rate. Is he responsible for the quantity? No. Quantity who will decide? Production manager. Production manager will say, look, I need 220 kgs. He can't say, what? Allowed is only 200. He can't ask. 220, if I ask, you should place an order for that. What is the duty of the purchase manager? Just to find the best guy in the market, finish it at a proper rate and close off. And the purchase manager is given a maximum cap of 10 rupees. Correct or not? 10 rupees. Now, this is what your other 2 variances talk about. Material price variance and material usage variance. Now, as the name suggests, you tell me, who is responsible for the price? Who is responsible for the price? Who is responsible for the price? Everyone. Purchase manager. Correct or not? The purchase manager is responsible for the price. Correct, guys? Correct, guys? Now you tell me, when he is responsible for the price, I will say, I want to judge whether the purchase manager is good enough or not. Can I say, when I want to find how good he is, what I will compare? Standard price with actual price. Correct or not? Correct or not? Correct or not, boss? Yes. Are you clear with this? Yes. Yes, you are understanding this. What will I compare? I am gauging the performance of whom? Purchase manager. Within the bracket, what comes? What will I judge? The price. What was the price that you were allowed versus what was the price that you have actually done? You were allowed to spend 10 rupees on every kg of raw material, but you have actually spent only 9 rupees. Correct? Is it a good thing or not? Is it a good thing or not? Yes. But wait. Now I will multiply this with actual quantity. Sir, why are you multiplying with actual quantity? Because the purchase manager is dependent on the production manager for the quantity. Correct or not? For whatever quantity that he is asking me to purchase, I will directly go and purchase. Is it there in my control? Is it there in my control? Is it there in my control? Tell me guys, is it there in my control? No. So what is not there in my control should not be given to me, because if I put standard quantity alone, then it means that the efficiency or inefficiency of the production manager is getting passed on to him. Correct or not? Now I'm trying to find out exclusively the efficiency or inefficiency of the purchase manager. So what I do here is multiply it with, for each of the 220 kgs, what was the efficiency level I'm trying to find out. So how much is this? How much is this? So 10 minus 9 the whole into 220. How much is this? How much is this? 220. Adverse or favorable? Entire thing is favorable. Are you getting it? Are you getting it? Are you getting it? Guys, are you getting it? Now, how about the material usage variance? Who is responsible for that? Hello? Who is responsible? The production manager. The production manager. Now, the production manager is responsible for what? The quantity, consumption, correct? So within bracket, I will compare what with what? Guess. Standard quantity minus actual quantity. But this is only in kgs. I need to give it a monetary value. I will multiply this with standard price. I will not multiply with actual price. Why, sir? Because production manager is not dependent on the purchase manager. Correct. It's a one-way traffic here. It's a one-way traffic here. Like step ladder, it's a one-way traffic here. The production manager is not dependent. Just assume if I put actual price here, then I will be passing on the efficiency or inefficiency of the purchase manager to the production manager. Correct or not? Correct or not? Guys, does it make sense? Does it make sense? And this is exactly what I'm talking about. This is not mugging up formulas. This is not mugging up formulas. Now, material price variance within the bracket, you are judging which fellow? Purchase manager, responsible for what? Price. So what minus what? Standard price minus actual price. Multiplied with what quantity? Actual quantity, because I am dependent on which fellow? Production manager. Go to the production manager side. Material usage variance within bracket, what do I judge? Standard quantity minus actual quantity multiplied by standard price. Why standard price? I am not dependent on the purchase manager. Are you clear with this? This simple it is. And look at this. Look at this. What is the standard quantity? You should have consumed how much? 200. You have actually consumed how much? 220. Overall multiplied by standard price. How much is it? How much is that? 10. So now you tell me you have consumed 20 kgs more into 10. So it is 200 adverse. Correct or not? And if you net off the two, you get 20 favorable. And that is your daddy on the top. Daddy on the top. Yes, are you clear with this? That's on the top. Are you clear with this? So material cost variance, I'm segregating it and finding out who is responsible. If you see, this guy was super efficient and this guy was extremely super inefficient. And that is the reason net off I got only 20 favorable. Had it not been the case, I would have got more favorable. Correct or not? Now it makes sense. Now you know who is the culprit, who is the guy who has actually made it good for the company. Are you clear with this? Guys, are you all understanding this? Are you all understanding this? Now, guys, you just tell me, without looking at anything, you just tell me, what is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Simple. Now, this is branched into two. Material price variance, material usage variance. Price, whom are you judging? Whom are you judging? Purchase manager. So, within bracket, the judgment, what is it based on? Standard price minus actual price into actual quantity. Why actual quantity? Because whatever that fellow asks only I am purchasing. Don't blame me for that. Correct? Now, how about material usage variance? Standard quantity minus actual quantity into standard price. Why standard price? Because production manager is not dependent on the purchase manager. And this we are finding it difficult. Tell me guys, was this difficult? Tell me, was this difficult? Was this difficult? What is the formula for material price variance? Standard price minus actual price into actual quantity. Correct? What's the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. What is the formula for material usage variance? Standard quantity minus actual quantity into standard price. Do you have to mug up anything? Do you have to mug up anything? And why do people say standard costing is difficult? I don't know. because they don't spend time on the concept. We'd have just spent about 1.5 hours on this, or maybe a little lesser than that. Spend more time on the concept. You can tackle any kind of sums. You can tackle any kind of sums. If tomorrow someone is asking you in an interview, this happened to me personally. I actually did the first year of my articleship in a Big Four. They looked at my costing mark. They wanted to really know if I actually, learned it by heart and wrote it, or I really know the subject. They asked me something in standard costing. Why are we doing standard costing? Tell me the reason for some price variance, they asked. So now when I told them, that's when they were like, okay, fine. So this guy knows the subject. What I'm telling you is, if you learn the subject without even knowing the concept, then actually it's a big injustice that you're doing to yourself. Look, this way if you learn, it's going to be super fun, no? Any kind of question, let them bounce a Yorker, bouncer, whatever it is, let them bounce. You know how to tackle it. Correct or not? Correct or not? Any kind of question. Missing figures, let them give. I know the formula, why it has arrived. I need not mug up. At the back of your mind, you need not mug up while you go to the exam. You know why things are happening. Correct or not? Correct or not? Even if someone wakes you up in the midnight and asks you what is the formula for price variance, you must be able to tell. Are you clear with this? Are you clear with this? And this is exactly what we'll be doing in the other segments as well. Your labor and overheads, variable overheads and all. Of course, fixed overheads alone is a different ball game altogether that we'll be tackling differently. But here, as of now, did you guys understand what we just did? Did you guys understand what we just did? Yes, guys, are you all understanding? One final time, please tell me, what is the formula for material usage variance? Standard quantity minus actual quantity into standard price. Don't look, up, don't look. You only mainly said. So I want you to answer. So tell me, what's the formula for material price variance? Price variance. Standard price minus actual price into actual quantity. That's simple. Yes, yesterday you only said it was very difficult to mug up the formulas and all that. Now are you understanding the logic behind every formula? Yes, you guys are understanding it, not to point out anyone. I'm telling you, many students find this generally difficult because they don't take the efforts in knowing the concept. Fine, what's the formula for your material cost variance? Daddy. Standard quantity into standard price minus actual quantity into actual price. Are you clear with this? Are you clear with this? That's simple. Now what happens in case you are operating in a multi-product? Let's say I require more than one type of raw material. Possible, no? Let's say I need raw material A, raw material B, raw material C. Only if I use all these raw material together, I will get my final output. Yes. Now what you need to do in this case, product wise compute all the variances. Are you clear with this? That is, material cost variance will be, for A you compute, for B you compute, for C you compute, add the 3. Are you clear with this? Are you clear with this? There can be a multi raw material that you use. If you use more than one raw material, what you need to do is compute the variances for every single raw material and add it up. Are you clear with this? Suppose one is adverse, one is favorable, it gets netted off. Are you clear with this? But you need to write out product wise or raw material wise and the total you need to write out. We will be doing the next sum only about that. This is point number 1. Yes, I'll come to that. Sorry. Okay. What I told was, let's say you are having more than one raw material. Okay. Let's say you are having raw material 1, raw material 2, raw material 3. They are asking you to find out all the variances. When I do material cost variance, what is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Correct or not? What I will do? I will do this first for raw material A, then I will do this for raw material 2, then I will do this for raw material 3, and then I will add the total. That's all. What I'm saying is, if there are more than one products, what you need to do it for every single raw material separately and add the total. Suppose if I get an adverse here, if I get a favorable here, you know it can be netted off. Correct? One is plus, one is minus. Correct or not? Correct or not? You can net off and finally write out whether it's an adverse or favorable. Whatever it is, you can write down. Are you clear with this? We'll be doing the next sum. Don't worry about it. This is point number 1. So when you have more than one raw material, what you need to do? Raw material wise compute the variances and add it together. That's all. No great rocket science here. Fine. Number 1. Number two, when you use more than one raw material to produce an output, now your material usage variance is there. No? This material usage, we saw that material cost variance is bifurcated into 2, material price variance and material what? usage variance. So when you have a multi-product scenario, multi-raw material scenario, this material usage variance get further bifurcated into two more. Material mix variance and material yield variance. What is that? When we are doing the next sum, I will tell you. But these two variances are applicable only if you are using more than one product, more than one raw material at the same time. Are you clear with this? So material mix variance, material yield variance are what? Are two little babies of whom? Material usage variance. So basically, if you add the two, you should get what? Material usage variance. Correct? So you will get your daddy, new daddy. And if you add your MPV and MUV, you will get your grandfather. Correct? MCV. Correct? Material cost variance. Are you clear with this? Guys? So when will this come? Material mix and material yield. When will it come? When you are using more than mix. Mix itself means that more than one variety. Are you clear with this? Guys, is everyone understanding this? Sir, how to do this? I will tell you. The next sum when we are going to do, using that sum illustration itself, I will tell you. But for the time being, are you able to understand? What we are talking about? Does it make sense? Guys? Does it make sense? Yes? Is everyone clear with this? What's the formula for material price variance? Standard price minus actual price into actual quantity. Very good. So now let's get started with the next sum. So basically some sums will be like this example that I gave you, direct computation. Yes, as easy as this. This is actually an illustration in your study material. Whatever I gave you just now, it's an illustration directly picked from the study material only, not my own creativity. But this explanation and all, it's there in the study material, but it will run into pages. And you won't even feel like studying. Fine. I am not blaming the study material for that, because it has to be when there is not a, when someone is explaining it to you, they can explain it using all these charts and all that. But when you are preparing a self-study book, it has to run into pages, right? And that's where many students find it difficult. They feel, why should I know all this? Directly they go to that formula and start mugging up. That's the problem. Actually, everything is there in the study material. Fine. Maybe now if you go and read the study material, I'm not sure if you have the time, but now if you go and read it, now you will understand. Okay, fine. So this is the reason. This is for purchase manager. This is for production manager. Everything is given in the study material. The problem is we don't read it. That's all. Fine. Are you clear with this, guys? Are you all clear with this? So material cost variance, one figure, if I give that alone is not enough. I have to pin it down to the exact person who is responsible for that. And to whatever extent I need to quantify it. Are you clear? This is exactly called as performance evaluation. I'm evaluating his performance. That's why in your final, the costing subject itself is called as strategic cost management and performance evaluation. The subject's name itself is that only. It's called performance evaluation because you will do this. And this chapter has another name. Standard costing has another name. It's also called as variance analysis. This chapter is also called as variance analysis. Nothing. We are analyzing the variance. That's all, no? Correct? That is the reason why this chapter is also called as variance analysis. Now, guys, shall we do the next sum? Shall we do the sum? So, I'll tell you, we will do the sum. This upcoming sum we will do, and then we will take a break. Is that okay? What? Biggest motivation, huh? Okay, fine, we'll take a break after that. No. We will do the sum, and then we'll take a break. Fine. So, you should be what? Enthusiastic. Super enthusiastic. Yes? Fine? Right? So, shall we, guys? Shall we do it? Okay, fine. So, let's get started. Now, the next sum, if you see, few lines it will be there. That's all will be given in the question. Now, if you are not able to get that sum just by going through whatever concept that I've told you, it's okay. It's okay because whatever I told you was one illustration for the study material that you understood. This is another type of sum altogether. And this was tested recently in November 2019. I'll just show this question. Where is it? Standard costing. Yes. Problem number one. Let me just read out this question for you. The standard cost of a chemical mixture is as follows. The material, 40% material A at rupees 20 per kg. This is one. And then 60% material B at rupees 30 per kg. So what they are saying is inside your output, if you see 40% of the material will come from A and 60% of the material will come from B. And every kg of A you should buy it at 20 rupees. Every kg of B you should buy it at 30. Standard or actual? Should means standard. Are you clear with this? Fine. A standard loss of 10% of input is expected in production. Meaning what? If my total input is 100, from A I should have 40, from B I should have 60, correct or not? So that will make my total input as how much? 100. Now out of this mixture, after mixing, what happens? Some 10% will be a loss. Meaning what? Meaning what? Ultimately I will get only 90. Are you understanding this? So only if I input 40 kgs of A and 60 kgs of B, will I get an actual output of 90. Are you clear with this? This is what they have given. This is the first part. Next, the cost records for a period showed the following usage. Meaning what? Showed means what? Showed means what? Perfect. Actuals. Actuals. Now, what have they used? They have consumed 90 kgs of material A at a cost of 18 per kg. So this is what? Actual quantity. This is what? Actual price. Correct? Then for B, they have used 110 kgs of material B at a cost of 34 per kg. So they have also given the actual quantity of B and actual price of B. Correct? The quantity produced was 180 kgs of good product. Meaning what? Output. The output ultimately that came out was how much? 182 kgs. Sorry? 182 kgs. So calculate all material variances. Any guess how many marks this question is? 10 mark question. It's a 10 mark question. No, that's why I said don't judge a book by its cover. Please don't judge this question based on the volume. It's a 10 mark question, worth a 10 mark question. It's absolutely worth a 10 mark question. Now, I'll give you 60 seconds time, solid 1 minute. Fine, go through this question fully and then you just have a mindset, frame your mind and tell me what has to be done. Okay, and then we will get started with it. Clear with this, guys? 60 seconds is all yours. Please don't talk among yourself. Even if you have a doubt, please don't talk among yourself. But you are always welcome to ask me anything. You are always welcome to ask me anything. Please don't talk among yourself. My humble request. Exam scenario, let's recreate it here. 60 seconds from now on. Yes, guys. Yes, time's up. Come on. So now, what's the problem in this question? Can anyone tell me what's the problem in this question? What? Sorry, come again? Perfect. What were you saying? Sorry, everything is given in percentage, so what? Sorry, material is given in percentage, so what? So basically, your problem is how to compute standard quantity. Correct, that's what you're saying. Anyone else? What was the problem that you guys were facing? Loss is that. So basically, loss means that's related to quantity. Okay, fine. It's quantity related. Any other issue? Fine. So everyone, are we all agreeing that computing the standard quantity is where the problem is? Because actual quantity, no problem, they have given. Correct or not? Standard quantity, it's been given completely in terms of percentage. Correct or not? So now, how are we going to do that? How are we going to do that? Now, first, you need not do anything. Let me do it. You participate, then I'll give you time to note down. Okay? I'll give you time to note down. First, you just look at the screen, follow it, participate, answer. If you are wrong, thank yourself for being wrong. Thank yourself for being wrong, because don't ever fear in making mistakes. Thank yourself for being wrong, because that's when you learn. Don't think that I should always be a perfect guy. No. No one is perfect here. So have that mindset. Learning attitude, you have it. Don't even worry whether you're getting wrong. It's absolutely fine. It's absolutely fine. Fine. So please participate. Even if you don't know something, it's okay. Participate. That's when I will know what extent you know. And then I will correct you then and there. Are you clear with this? So please participate. My humble request to you all. Fine. Now, this is what question number 1 now. Fine. This is question number 1. You guys need not write down anything. So question number 1. So tell me the page number. It's on, it's page number 24. Yeah. Page number 24. This is what standard costing. Fine. Okay. Right. Now guys, what I will do is, first you tell me, for us to do this sum in standard costing, how many figures we need for each different raw material? How many figures we need? 4 figures. Standard quantity, standard price. Actual quantity, actual price. If you have these 4 figures, you can just play around with it left, right and center, because only 4 figures we are dealing with. Correct or not? And the first step for any kind of standard costing sum is to find out these 4 figures and write it. Correct? Once you have these figures with you, you know why these formulas came. Substitute, finish the question. Life is simple. Correct or not? But arriving at these figures is where the question lies, the problem lies. Are you clear with this? So what you need to do is, the formula has only 4 components. Standard quantity, standard price, actual quantity, actual price. This if I find out, it's okay. In this question, actual price details are given. Actual quantity details are given. Even standard price details are given. Only standard quantity, if you find out, the sum is done for you. The sum is done for you, and that's where the catch they have kept. Are you clear with this? Are you clear with this? So let me do it for you. Let me do it for you. You guys participate, and then I will take it forward. I will take it forward. Then I will give you time to note it down. Fine. So now first, let me just have a tabular column. Let me just have a tabular column here saying standard and actuals. Standard and actuals. Here, first I will have standard quantity, standard price, amount. Actual quantity, actual price, amount. Now, how many products do we have, guys? How many raw materials do we have? Sorry, products, raw materials. How many raw materials? A, B. If you add A plus B, you will get the total input. Correct or not? You will get the total input. Correct or not? From that, they have said there is some loss and all. If you get this, you will get the output. Correct or not? Isn't this the format, guys? Isn't this the format? Is everyone understanding this? Is everyone agreeing with me on this? Is everyone agreeing with me on this? Now, let's fill the figures that we have with us right now. Shall we? Shall we? Now, actual quantity of A is present. Guys, look at the question. Answer. Actual quantity of A. How much? How much? 90. Actual price of A is given. How much? 18. Okay, fine. Actual quantity of B? 110. Actual price of B? 34. Okay, fine. So I have added 90 kgs of A and 110 kgs of B. Now I can add these two. Now don't say, sir, donkeys and monkeys, how it can be added. No, it's a mixture, a chemical mixture. It gets blended together. So in this case, we can add. Are you clear with this? You should know where to use that logic and where not to use that logic. Are you clear? Now I can add these two. How much does it come out to? 200. So totally I have inputted 200 kgs. What's my output I get? What's the output? 182 kgs. Which means I have actually lost how many kgs? I have actually lost how many kgs? 18 kgs. How did you know this? Balancing figure. Correct or not? Balancing figure. Pencil circle. Balancing figure. How? 200 kgs I input, but what I got was only 182, which means 18 was lost. Correct or not? Now, can you just multiply these two and tell me what's the figure here? 19 to 18. How much is it? 1620. 110 into 34. 3740. Fine. What's the total? 5360. This is the cost I incurred on how many kgs? 200 kgs. But invariably 18 kgs I lost. Correct or not? There is no savings on that and all. That is lost. So can I say I have to incur, only if I incur 5360, I will get good output of 182 kgs. Does it make sense or not? Does it make sense or not? Yes, you look very confused. What happened? What is the 10%? Standard loss. What column are we in? Okay, done? Yes? Any other doubt? Please ask me the doubt. Please ask me your doubt. Yes? How this is 5360? Why? See, okay, I'll tell you, you need to input 200 kgs, correct? Correct? And the cost incurred for 200 kgs is 5360, correct? And only if you incur 200 kgs, you will get good output of 182 kgs. So basically, can I say that 5360 is the total cost I am incurring in order that I get a good output of 182 kgs. Does it make sense? Yes. So only if I input 200 kgs, I will get good kgs of 182, which means only if I spend cost on 200 kgs, I will get good kgs worth 182. Are you clear with this? Any doubts here? Are we all settled on this? Are we settled on this? Are we settled on this? Now, Now, guys, everyone, please listen. And of course, standard price are also given, no? How much? This is what? 20 and 30. Fine, right, great. Now, you tell me, what do you mean by standard quantity? What is the meaning of standard quantity? What is the meaning of standard quantity, guys? For the actual output, how many kgs of A and B I should have inputted? Correct or not? So can I say the starting point should be this? For me to actually achieve the output of 182 kgs, what should have been my input is what I'm trying to find out. Correct or not? Now they have said you are allowed to have a standard loss of how much? 10. Meaning what? If you input 100, you can get a loss of 10, which means your output should be 90. Correct, guys. Now, if 90 is equal to 182, how much should be 10? Can we find out 182 divided by 90 into 10? Now, does it answer your question, mister? You asked, no? Here you will use that standard loss, because standard loss comes only in standard column. Then what is this 18 kg, sir? It is actual loss. That's why we are tracking it in actual column. Are you clear with this now? Now this loss, how much is it? So 182 divided by 90 into 80 into 10. Please don't round it off. Tell me the figure. 20.222. Of course, retain the decimals. So how much is this? Add it up. 202.222 and all that. Now, out of this 202.222, 60 or 40 or 40% should be A, 60% should be B. So 202.2222 into 0.4 is equal to write down, 0.6 is equal to write down. How much? 80.89 and 121.33. Correct? Are you clear with this? And now we got everything we want. Yes or no? Now we got everything we wanted. The problem is students don't know. Many students, this is where they make a mistake. They don't know that the starting point for standard should come from here. Because what do you mean by standard? For the actual production, how many kgs I should have consumed? Are you clear with this? Is everyone clear with this? So first fill the given data and then come to your standard. Yes. Sorry? Total what? Total input is? If total input is 100, my loss will be 10, which means my output will be 90. So based on this is a proportion. Based on this, I am calculating. So this 20.2, how I computed? 182 into 10 by 90. Using this only I computed, no? 100, 10 and 90. What they are saying is, loss is how much? 10% on what? Input. Which means what? If my input is 100, my loss will be 10, which means my good output will be 90. Correct? So if 90 is equal to 182, how much will 10 be equal to? That's how I found out. Mathabadi, it's not. 100 is not the actual input. 100 is for that proportion I have kept. Don't worry about that. Are you clear with this? Is everyone understanding? And this is how you need to do it. And now one more thing, guys. Here we have, for simplicity's sake, we have written 80.89. But when you are using your calculator, please retain the full decimals. Because in our in this chapter, your material price variance plus usage variance should tally with your cost variance. No, if you round off here and there, it will not be matching. 1 rupee, 2 rupee, 10 rupees will actually be here and there. So actually, when you are calculating the amount, can anyone calculate the amount and tell me how much is this? 80.88888888 into 20. How much is that? 1617.78. Then how much is this? 3639 point something, 3640. So how much is the total? Sorry, okay, how much exactly is that? 0.9999. So 0.9999 if you round off, okay fine, if you want you can keep that, no problem. How much is that? 5257.78. Na sonadhu enakke appikiram padiya. Right. So 5257.78 is the total cost that you should have incurred. Wait, I will erase all these scribblings. Yes guys, just note it down. Quickly. Are you guys able to follow this? Is everyone able to understand? Guys, Are you all able to understand? Yes, make it fast, make it fast. I'll give you just 2 minutes time. Quickly note it down. Do it by yourself. Don't copy paste. Please don't copy paste. Do it by yourself. If you're struggling somewhere, refer the screen. Make it fast, guys. You know how to do it. I've taken a lot of time in explaining this. So you have also been involved in it. So if you have really concentrated, obviously you'll be able to do it by yourself. Please do it. Please do it. Come on. So once you get this, now the sum is very easy. You know, substitute SQ, SP, AQ, AP and finish it off. That's not at all a matter. Let's do this quickly, guys. Come on. Make it fast. Done, guys? Are we done? Completed? Yes, completed. Have you all noted this down? Guys, please respond. Done now? Done? Shall I proceed further? Online folks, shall I proceed further? Yes, everyone?
Yes, sir.
Yes? Okay. Okay, right. 3 students have answered others. Okay, fine. Right, done. So let's proceed forward. Let's proceed now. Now you have all the required data with you. So material wise you have the standard quantity, standard price, actual quantity, actual price. Now what we need to do, just a matter of plugging the figures in the respective areas, the formulas, and you know what to do. And why this formula comes, that logic also you know. Are you clear with this? And it's a complete package. It's done. That's about it. So let's get started. Now. So write down. First write down material cost variance. Material cost variance. Guys, what is the formula? Hello? Standard quantity or standard price into standard quantity minus actual price into actual quantity. Fine. You can also write standard quantity into standard price minus actual quantity. That inside multiplication you can switch it any ways you want. Some books will do it that way. It's not like that is not specific format. You know, what you need to know is more about the concept. Are you clear with this? Fine. Now, one second. So what you need to do is for A you need to compute separately, for B you need to compute separately. Correct or not? But actually we ourselves have done it already, no? Correct? Standard quantity into standard price of A is so much, for B is so much, and we have added the total. Correct or not? Guys, correct or not? We've already done it, no? Are you understanding it? You want me to repeat? We've already added it, no? Purila. We're just adding it, that's all. So standard quantity into standard price of A, standard quantity into standard price of B, you have this two separately and it's already added here. So we can directly put it here, 5257.78. That's the total standard cost for A and B put together. Correct or not? You're not understanding? No, first. Okay, fine. You tell me, standard quantity to standard price of A is how much? Standard quantity of A into standard price of A is how much? 1617. Standard quantity of B into standard price of B is how much? 3640. If you add the two, how much you get? And that's what we have done here. So total standard cost for A plus B put together is 5257.78. Total actual cost incurred for A plus B put together is how much? 5360. Correct or not? Minus 5360. Correct, guys? So tell me, adverse or favorable? You should have incurred 5250 and not something, but you've actually incurred 5360. Adverse, favorable? Favorable. How is it favorable? You should have spent only 5200 and odd. You have spent more, no? Is it an adverse? Is it a favorable? Absolutely not. It's an adverse. How much is it? Rupees 102.22 within bracket adverse. Always remember, if you just write this and leave, they will not give you marks, because without no. In this chapter, there is no question of minus and plus. It has to be clearly indicated adverse or favorable. No minus and plus and all allowed. No, then why do we have the concept of adverse and favorable? Because what is plus What is plus in sales side is minus in cost side, correct or not? So you can't actually put it as minus and plus. It only makes sense if you suffix the figure with an adverse or favorable. So that's when adverse means what? Reduces your profit. Favorable means what? Increases your profit. Clearly it's done. So there is no confusion at all. Don't put minus. Please don't put minus. I am not sure whether they will give you marks or not. This chapter, actually, they have variance analysis. They have classified it into adverse and favorable. Let's do it the way Institute is doing it in the exam. Are you clear with the suggested answers? All your RTPs and your study material, they are only following this approach. So let's also stick on to this. Are you guys clear with this? Are you guys clear with this? Fine. So don't put minus in case that's a doubt. Yes, very good that you asked me. Fine. In case you have a habit of putting minus for adverse and plus for favorable, please don't use it. Please don't use it. Do it only like this because it's given like this in the study material. Clear with this, guys? Now, material cost variance has two little babies. What are the two little babies it's got? Yes, material price variance, material usage variance. Guys, don't look anywhere. Price variance, formula. So, standard price minus actual price into actual quantity. Why? Within the bracket, the price is getting compared because the purchase manager, and quantity, whatever quantity that production manager asked me only, I am purchasing. How about the other side? Material usage variance. Standard quantity minus actual quantity into actual price. Actual price. No, standard price. Why standard price? Because production manager is not dependent on the purchase manager. Clear with this? Clear with this? If I put actual price here, then I am actually including the efficiency or inefficiency of the product purchase manager to the production manager. That is wrong. So separately, I should look at his efficiency level and the other guy's efficiency level. Are you clear with this? Are you all clear with this, guys? Are you all clear with this? Now, first for raw material A, tell me, what is the standard price? Pick it from the top. We've just done it, no? 20. Actual price is how much? 18. Into actual quantity is how much? Actual quantity is how much? 90. So tell me, favorable, adverse? Favorable, adverse? Favorable, adverse. You should have spent 20. You have just finalized the deal in 18 rupees on every single output that you actually purchase, every single raw material that you purchase. So how much is this? 180. Monkey or donkey? Favorable. Favorable, right? It's favorable, right? Yes, it's favorable. Correct or not? Are you clear with this? Are you clear with this? Then for B, come on, go pick it up. What's the standard price? What's the standard price? It's 30 minus actual price. How much is that? 34 into actual quantity. 110, 110. Correct or not? Look. You were supposed to pay only 30 rupees. Every kg of raw material you purchased by paying 4 rupees more. How many kgs you purchased actually? 110. So it's 440. 440 adverse. Correct or not? So if I net it off, there is a net adverse only now for me. How much is that? Net it off and tell me. How much is this? 260 adverse. Adverse, no. How is it favorable? 260 adverse. Are you clear with this? This is why I said when you have a multi-product, it's simple. Product-wise, you compute all the variance and total it up. This is what I was telling you. Are you clear with this? Guys, is there a problem in understanding this? Is there a problem in understanding this? Is everyone able to follow this? Is everyone able to follow this? Sure, guys. You guys are able to follow this? Perfect. Very good. Now, shall we move on to the other side? What's your usage variance? Similarly, for A, fine. Now, what's my standard quantity for A? Guys, look at the table. Everything is there on the table. You need not look at the question. Look at the table. That's all. You will get it. How much? 80.89. 80.89, right? So, 80.89 minus actual quantity of A, 90 into standard price, 20. How much is this? You were allowed to consume only 80.89. You have consumed 90. Efficient or inefficient? Inefficient. You consumed more. So it's an adverse variance to the extent of how much? Sorry, how much is 182.22? What? That's what? 182.22. Adverse, correct? What happened? 182.22 only, no? What happened? You rounded off. That's why I said don't round off. 182.22. Fine. You're getting the same answer only. Fine. Next. B. Come on, guys. B. What's the standard quantity? 121.33. minus actual quantity is how much? 110 into 30, right? Into 30. So you were allowed to consume 121 and odd kgs, but you've consumed only 110. So it's a favorable variance. So how much is that? 339.999. So that we will round off to 340. Fine, 340. Yes, if you want, you can retain the decimal. If you want, you can retain the decimal. Yes, I know you will have this down. You can retain this. 339.9999. Yes, that you can do. No, fine. Okay, right. Okay, right, fine, okay. But just to ensure, if you add these two, you get the top figure. That's all. That you take care of it. Are you getting it? That alone you take care. For that, whatever it takes, you do it. Okay, so this is favorable. This is favorable, correct? So net of favorable or adverse? Hello? No, adverse. It's favorable only, no? 340 is favorable, 182 is adverse, correct? Net of how much is it? 157.78, 157.78. Favorable or adverse? Favorable, correct? Now immediately check. You don't have this luxury in all the chapters. This chapter you can check. If you add the two, you should get your daddy. Is it coming? Yes. So how will you do this? 260 minus, yes, 157.78. Net off you are getting 102.22. Adverse, are you getting, guys? Yes, guys, are you getting it or not? Are you getting it or not? Is everyone getting it? Is everyone getting it? Is everyone getting it? Sure? Yes? Done? Are you all understanding this? The entire efforts was to build the topmost dabba. Once you build the topmost dabba, you are sorted for the sum. Because you are just going to pick the figures, plug and play. That's all. That's about it. Just plug the figures then and there, get your answers, and you can also verify. That luxury is there in this particular chapter. You can verify the sum of these two should add up to the total. Now, one student asked me for presentation, sir, you have drawn like this tree and all you have drawn. Shall we do it like that in the exam? Yes, you can do it in the exam. If you see in your study material self-set answers, they would have done one below the other. Yes, you can also do it like this. Absolutely no problem. Because provided it is legible and you are neatly giving some space. I should not talk about legibility, but anyways, fine. So provided it's legible and you are giving some proper spacing and all, it's absolutely allowed. You need not worry about it. Are you clear with this? In fact, I wrote my intermediate exam like this only. I wrote it like this, and I was told by my faculties also that this is acceptable. That's why with that confidence only I went and I did it like this. If you do it like this, you can automatically visualize the chart and you can do it. If you want to do it one below the other, absolutely you have all the freedom to do that. Okay, clear with this? So for presentation part also, I'm clarifying the doubt. Okay, clear with this? Now, are we done? Are we done? We are not done. This is a multi-raw material, mix of raw material scenario. So, this material usage variance will have two little babies. Correct or not? Material mix variance and yield variance. You don't do anything right now. I will first do it and tell you what it is, and then you can just write it down. With this, we'll take a break. Okay? After this concept, we'll take a break. Is that fine, guys? Is it fine? Perfect. Now, so let me just use the length of the page. You need not write anything. So just patiently hear me out. Patiently hear me out. Fine. If you have any doubts, please ask me. Once I finish this, if you have any doubts, you can just ask me. Clear? So material usage variance. What is the formula for material usage variance? Standard quantity minus actual quantity into standard price. Okay, fine. Now, what does usage variance talk about, guys? You should have consumed 200 kgs. You have consumed 220 kgs. Correct? Since you have consumed more, with respect to the usage side, if there is any variance that gets tracked inside what? My material usage variance. Correct or not? If there is any variance arising out of my consumption pattern, that gets tracked under my usage variance. Correct or not? Now, this usage variance can, again, I am telling you, it can happen because of two reasons. It can happen because of two reasons. Let me just tell you. In this question, let me just take an example. Okay, I'll just put it down here somewhere. Let me just take an example. Let's say raw material A, raw material B. Let's say 60, 40, a total of 100 is what you should have consumed. Okay. And raw material A, this is standard quantity. Standard price, let us say raw material A costs 1 rupees, raw material B costs 2 rupees. Okay, clear with this? Now, Now I'm talking about the actuals. Actual quantity, if you see, they have consumed, let's say they have consumed 50 kgs of raw material A and 60 kgs of raw material B. So this makes it the actual price. Let's say they have purchased it at 1 rupee and 2 rupee only. Let's forget the price part of it. Fine. Now overall how much they have consumed? How much? How many units? 110. Now you tell me, will there be a variation in the usage? Usage side, will there be a variation? Usage side, will there be a variation? Correct or not? Definitely yes. But I am telling you, this will happen because of two reasons. What are the two reasons, sir? First reason you guys know, as against the 100, they have consumed something more. Overall yield, there is some more yield. They have used more. Correct or not? This is one reason. But reason number two, which generally we forget is, look at this consumption pattern. A is a cheaper raw material, B is a costlier raw material. What they have done, even this 110, they have not used it, they have not consumed it in the ratio of 6:4. Correct or not? They have consumed more of a costlier raw material, lesser of a cheaper raw material. Because of the change in the mix also, there is your effect in your usage variance. Correct or not? So usage variance can happen because of two reasons. One is because you are deviating from the mix, and number two is because overall you are consuming more. Are you clear with this? And this is what is the two little babies of usage variance: material mix variance and material yield variance. Are you clear with this? Now sir, how do we compute that? I will do it and show it to you. But first, are you convinced that usage variance can happen because of two reasons? First reason is overall yield. Because of that. The other reason is because of change in the composition. I am using more of a costlier raw material, lesser of a cheaper raw material. I will be incurring more cost. Correct or not? Because of the change in the composition, I can have a variance. Are you understanding? Is everyone understanding this? With this background, if you go to the particular formula, you will understand. Now the formula for material mix variance. The formula for material mix variance is revised actual quantity minus actual quantity into standard price. Now what is this, sir? Revised actual quantity and all? I will tell you. Wait. First, let me just draw one dabba. Revised actual quantity and standard price. You only need these three figures. Correct or not? Now I want you guys to participate and tell me A and B. Actual quantity, you know. Actual quantity of A and B. Pick it up and tell me how much. How much is it? 90 and 110. Correct? How much is it in total? 200. Now what is revised actual quantity? Now when I'm talking about the mix variance, I am trying to figure out how much of my usage variance is attributable only because of the deviation in the mix. Here what I will do, that extra 10 kgs I consumed in my example, I told you, I have consumed extra 10 kgs, no? That gets tracked in yield variance. But whatever this 110 kgs that I have actually consumed, that at least I should have maintained the original mix, 6:4. Because of the fact that I am deviating from the mix, how much is the variance that is stemming out of it is what is getting captured under material mix variance. So how are we going to do this, sir? You tell me what is the ratio in which A and B should have come? A and B, 40%, 60%. Huh? So basically what we will do is the actual quantity is how much? 200. This actual quantity, fine. For some reason, you have deviated from the total standard quantity. Correct? Fine. Be it so. At least whatever actual quantity that you have consumed, that should have at least been in the original mix of 4:6, no? Correct? How much? So how much is A and how much is B? How much should have been A? How much should have been B? This is going to be 80 and 120. How did you get it? 20 into 0.4, 20 into 0.6. Correct or not? So at least I am comparing in my mix variance. What am I comparing? I am comparing actuals with actuals only, but actuals in standard mix with the actual and actual mix. Are you clear with this? Just because of the variation in the mix, what is the amount of variance that is coming out is what I'm trying to find out. Are you clear with this? So now what's your standard price? It's already given in the question. How much is it? 20 and 30. So now can you tell me what is my material mix variance here? You should have consumed 80. You have consumed 90. So it is 80 minus 90 into 20. How much is that? 200. Adverse or favorable? Adverse or favorable? You have consumed it more. Adverse. Correct or not? Here, you are allowed to spend, you are allowed to use 120 kgs. You have used only 110 kgs, which means there is a favorable variance. How much is that? 300. Favorable or adverse? Favorable. Net of how much is it? Net of how much is it? 100 favorable. Are you getting it? Are you getting it? Is this the total usage variance? No, no. Overall, if you see in this example, against 100, I have consumed 110. Okay. So, which means that did not get captured. I have not yet captured that. But this 110, I should have retained my mix. That I am deviating. What is the effect? That alone I am comparing. Are you clear with this? Are you clear with this? So, left side of the chart, mix variance, compares your actual quantity in the standard mix with the actual quantity in the actual mix. That's why I am comparing, that's why I am calling this as revised actual quantity. Why am I using the word revised actual quantity? I am revising the actual quantity. What revision are you doing? You are applying the standard mix on the actual quantity. Are you clear with this? That's why I am calling it as revised actual quantity minus actual quantity. And into standard price, I will get your material mix variance. Are you getting this? Are you getting this? Is everyone understanding this? Is everyone understanding this? Is everyone understanding this? Now, very simple, material yield variance. Material yield variance. Can I say it's nothing but a balancing figure? Can I say it's nothing but a balancing figure? Or I think it's quite congested here. Let me just come down. You guys tell me, wait, you please listen. Material usage variance, formula, na? Standard quantity minus actual quantity into standard price. Now, material mix variance. What formula did I tell you? Revised actual quantity minus actual quantity into standard price. Because we are always on this side. So here, whatever I multiply outside is only standard price. Actual price will not come. Why? We are talking about the production department and I am nowhere related to the purchase department. Correct? Fine. Into standard price. Now, material yield variance is there. Material yield variance is there. You tell me, material mix variance plus yield variance, I should get my daddy. Correct or not? Correct or not? Now, you tell me, within this bracket, something should come into selling standard price. SP remains constant everywhere. Correct or not? Correct or not? Now, I should add something to this to arrive at this. Correct or not? Correct or not? Can I say this is a balancing figure? Now, what I should get on the top? What I should get on the top? SQ minus AQ. Correct? I currently have what? RAQ minus AQ. So, this minus AQ I have already got. I have already got this minus AQ. Correct or not? What I need to do is, I need to get SQ. For that, I need to remove RAQ. Correct or not? Can I say this is nothing but a balancing figure? Standard quantity minus revised the actual quantity into standard price. If you add the two, can I now say these two gets knocked off and finally you get standard quantity minus actual quantity into standard price? Correct or not? Guys, are you understanding or you want me to repeat? You want me to repeat anything? You want me to repeat? You want me to repeat? Yes, you want me to repeat? Yes, I will do it. I will do it. Fine. Just a minute. I'll erase this off. I will erase this off. Okay, guys, please listen here. Please hear me out. After this, we will break. Fine. So, again and again, I should motivate you, is it? Okay, fine. Please. Come on. Yeah, fine, guys. Now, this formula is okay. Material mix variance. Correct. What I told you, if you add your material mix variance and material yield variance, you should get what? Your daddy usage variance. Correct or not? Correct or not? Correct or not? So, basically, I should get SQ minus AQ on the top. Correct? Currently, I have RAQ minus AQ on the left. I should add something to bring the answer as this. Correct? Already, I have minus AQ. This is tallying with my answer. Now, I need to now bring SQ and I need to remove RAQ. So, can I say SQ minus RAQ if I do? If I add these two, what happens? RAQ gets cancelled and it becomes your answer on the top. That is SQ minus AQ. Correct or not? That is nothing but your material yield variance is your balancing figure. Are you getting it? Are you getting it? Guys, are you all understanding this? Are you all understanding this? Or logically also you can say, here I am comparing standard quantity with actual quantity. I am tracking for the difference in the overall material consumption. Correct or not? Logically also you can think and do. Are you getting this? Are you getting this? Is everyone getting this? First, material mix variance. What is the formula? Mix variance. Revised actual quantity minus actual quantity into standard price only. No doubt about that. And your yield variance is the balancing figure. It's a balancing figure. Are you clear with this? How do you balance? That's what I just told you, no? If you add something, you should get your daddy. Correct? So add SQ minus RAQ, you will get it. Are you clear with this, guys? Are you all understanding this? Is everyone understanding this? You want me to repeat it once again? Done. Sure. You'll still look confused. That's why I'm asking you. Sure. Is everyone understanding this? Is everyone understanding this? So now just go up. Let's go up. Let me just fill it up and then I'll give you time to note down. So material yield variance. What's the formula, guys? Standard quantity minus revised actual quantity into standard price. So now tell me, here I need not put this dabba and all. I have all the figures here. A standard quantity is how much? 80.89. 89 minus RAQ is how much? We just found out 80 into standard price is how much? How much is that? 20, 20. How much is this? 17, 17.78, 17.78. Just a minute, I'm sorry. 17.78. Adverse or favorable? It's favorable. You were allowed to use 80.89 kgs. You have used only 80 kgs. Correct or not? Similarly for B. For B, tell me, guys. For B, standard quantity is how much? 121 point. Sorry? 33. Okay, 33 minus 120 into 30. Okay, 30. How much is that? 39.99940. Okay, fine. 40 favorable, adverse. Wait, this is 40 favorable. Yes, favorable only. Yes, favorable. So total, how much is it favorable? Sorry, 57.78 favorable. So now, if you add your material mix variance and yield variance, you will get your usage variance. Correct or not? One second. Look at this. If you add your material mix variance and your material yield variance, you are getting your usage variance. Correct, guys? Are you understanding this? Are you understanding this? It is that simple. It is that simple. So what you need to do is, you need to know the logic. You need to know the logic for material cost variance, material price variance, material usage variance, and material mix variance. The balancing figure is material yield variance. Or material yield variance can also be understood logically. Standard quantity minus revised actual quantity into standard price. Are you clear with this? Are you clear with this? Quickly note this down and then we'll break. Quickly note this down, guys. Done, huh? Okay, perfect. Right. Done? Okay, fine. So we'll break now. Thank you so much. Yes, guys. So shall we get started? Now, we are done with the first leg of this particular chapter called as standard costing. The first leg of it was material cost variances. Guys, answer. No, please. Answer. Fine. You asked me for a break. 20 minutes, I gave it. Come on. Now it's your turn. Pay it back. Come on, guys. Yeah. So, material cost variances. So, can anyone tell me? Not anyone. Everyone should tell me what's the formula. Material cost variance. Standard quantity into standard price minus actual quantity into actual price. Segregate into two. Material price variance. Formula. Standard price minus actual price into actual quantity. Yes. And then usage variance. Standard quantity minus actual quantity into standard price. Then this usage variance is further classified into material mix variance and material yield variance. Mix variance, what is it? Revised actual quantity minus actual quantity into standard price. And the other one is a balancing figure. Standard quantity minus revised actual quantity into standard price. Are you clear with this? Now, if you know this, automatically we are done with labor variances and our variable overhead variances. I will tell you how. So now shall we move to the next segment, that is your labor cost variances? Shall we guys? Shall we guys? Fine. So let's move to the next segment called as labor cost variances. So write down labor cost variances. Labor cost variances. So now we all know that what's the objective of this chapter? What's the objective of this chapter? We have to compare the standard cost with the actual cost. That is, we need to find out the variances. Now, when we are talking about labor cost variances, we are going to compare what? Standard labor cost with actual labor cost. Correct or not? Correct or not? Correct or not? Yes or no? Yes or no? Fine. Now, your material cost, I will say it is quantity, that is number of kgs of raw material multiplied by price per kg of raw material. Correct or not? In labor, it is not quantity and price, it is hours and rate. Correct or not? Correct or not? That is hours into rate per hour. Correct or not? This will be the usage here. So wherever Q was there, you will replace it with H. That is, quantity will be replaced by hours, price will be replaced by rate. Everything else is the same. Simple guys. Yes or no? Yes or no? Now you guys tell me the formula for labor cost variance. Take a shot, it's okay, come on, take a shot. Standard hours into standard rate minus actual hours into actual rate. As simple as that. As simple as that. Now this gets broadly classified into two. Labor rate variance. There we called it as material price variance. In labor it's called as rate variance. And here the other one is called as labor efficiency variance. You don't use labor, you are just gauging the efficiency of labor. Are you clear with this? Are you clear with this? Don't look at that book and all. Wait, I'm just in the introduction stage. Once I do this, I will add up. I will build. Let's build the subject. You will see some idle time variance and all. I will tell you. I will build that. First, if I tell you that, you will not understand. Are you clear with this? First, are you clear with this? Now, in labor, it is a function of two things, hours and rate. Now, hours, who is responsible? The production manager only. Why? Because he only has a supervisors and all to oversee the work. Correct or not? You should have taken 100 hours. If your employees have taken 120 hours, I will blame whom? I will blame the production manager only, no? So efficiency talks about the hours difference, and who is responsible for this? Production manager. Correct or not? Now rate, who fixes the rate? Human resource. HR, not purchases department. HR, no, look, purchase department will only purchase raw material. But when it comes to labor rate fixation, who does that? You are a human resource, no? This guy only does that. Correct or not? HR department. Now always understand, when I'm talking about labor cost variance, I'm talking about direct labor only. Why? Indirect labor is anyways covered under your fixed overheads cost variances. Correct or not? So we are only talking about direct labor. Are you clear with this? Are you clear with this? Now you guys tell me, HR is responsible for what? For what? Rate. So within bracket, what will come? Standard rate minus actual rate. Now into whatever number of hours those guys are working, I need to pay for that. Can I tell them, no, you should be efficient and all? That production manager will say, that's none of your business. I will take care of the efficiency. You just pay whatever amount I take. Correct or not? Correct or not? So standard rate minus actual rate into what? Actual hours. Whereas labor efficiency variance, what is it? What is it? Who is responsible? Who is responsible? Production manager. What comes within the bracket? Standard hours minus actual hours. Now, is the production manager dependent on the HR? No. If I put actual rate, if I multiply this with actual rate, what happens? I am actually transferring the efficiency or inefficiency of HR to the production guy. So what I will do, multiply it by standard rate. That's all it is. That's all it is. Are you clear with this? Guys, are you clear with this? The standard hours into standard rate minus actual hours into actual rate is your labor cost variance. Branch it into two, labor rate variance. Who's the guy responsible? HR. Within bracket, what comes in? Standard rate minus actual rate, and I need to pay this on actual hours. Whereas the other guy, the production manager, what comes within the bracket? Standard hours minus actual hours, and I will just multiply this with standard rate. Why? Because I am not dependent on the HR guy. Are you clear with this? Are you clear with this? And similarly, similar to this, when you have multiple skill set, just like how we had multiple types of raw material, you can also have multiple skill set. No? For example, if you see in this construction site and all, there will be multiple skill set. One guy will be a civil engineer, correct? One guy will be a maestri. You know, this guy who does all this actual laying of brick and all that. Now, that guy will have one more assistant, correct or not? 3 labors will be there, skilled, semi-skilled, unskilled. The rate at which I pay them, will it be same or will it be different? It will be different. So, here also there is a mix coming up, no? Here also there is a mix coming up, no? So, just like how we saw the material mix variance, we have something called as labor gang variance. A pool of people coming together is called as gang. So, labor gang variance. Now, apply the same logic. Can you tell me what will be the formula here? Revised actual hours minus actual hours into standard rate. Are you clear with this? And then labor yield variance will be what? The balancing figure that I told you. Standard hours minus revised actual hours into standard rate. Are you clear with this? And that's about it, guys. That's about it. Are you clear with this? Is everyone clear with this? Is everyone clear with this? Is everyone clear with this? Guys, are you all understanding? This is why we spent more time on materials, so that you can extend the same logic and close off your labor and variable overheads. Labor at least has this under efficiency variance, it has gang and yield. Variable overhead doesn't have that also. It just stops here. Only your variable overhead cost variance, split it into 2, expenditure variance, and you have some efficiency variance, and done. That's all. Efficiency variance is not further classified in variable overheads. That is even more simple. Even more simple. One shot, 3 different types of variances we can complete. Are you clear with this? So once again, guys, come on, tell me. Labor cost variance formula. Don't look at the screen. Come on, tell me. Standard hours into standard rate minus actual hours into actual rate. Branch it into 2. Rate variance. Who is responsible? HR. Within bracket, rate, standard rate minus actual rate into actual hours. Whereas the other guy, efficiency variance, responsibility on production manager, within bracket, standard hours minus actual hours into standard rate. Why into standard rate? Because I am no way dependent on the HR guy, correct? And this efficiency variance is further classified if you have a multi-skill set. It's further classified into gang variance and yield variance. Gang variance formula: revised actual hours minus actual hours into standard rate, whereas your yield variance is standard hours minus revised actual hours into standard rate. As simple as that, guys. As simple as that. Are you clear with this? Are you clear with this? Now tell me, is it difficult? If you know the concept, it will stay with you for a lifetime. Trust me, that's the power of knowing things conceptually. Now, before we get into the sum, I will give you an illustration. We will do that. I will write down the question. You also write it down. And let's try to figure out the answer, and we will do it. Fine? Okay, clear with this? With that, I will introduce a concept called as idle time and all, and I'll tell you what it is. First, this branch, did you understand? Is it clear for everyone? Online folks, is it clear for everyone? Online guys, are you all clear with this? Yes? Are you guys clear with this? Yes? Fine. Perfect. Very good. Now. Please note down this example. Very good. Many people are answering online. Very good. For those who are not answering, please do answer, guys. Make this an interactive session. It's very good for you. Honestly, trust me, it doesn't make a difference for me. But I want each and every student to get the best experience. For that reason only, I'm striving hard. So please, guys, please make it an interactive session. Even if you're online, I want you guys to visualize as if you're sitting in a classroom. Okay? Clear with this? Fine. So let's get started. Note down this example. Let's say the standard rate per hour. Is rupees 10. Let's say the standard rate per hour is rupees 10. Okay? Then standard hours per unit, that is For every unit, you are allowed to spend how many hours? Let us say 2 hours. Okay. So for every unit, you can spend only 2 hours. Okay guys, clear with this? We are not talking about a multi-skill set and all. Normal, only one type of labor. Okay. Forget that multi-skill set. So if you don't have a multi-skill set, that gang variance and yield variance will not come into picture. Okay. Clear? We're talking about a single skill set. I just want to drive home one very important point. Now, they have also given you some actual data. What is that actual data? They are telling you what is the output. Output is 100 units. And always remember, output is the hero of this chapter, because only for the actual output, I will compute, based on that only I will compute something called as standards. Correct or not? So for the actual output, what should have been the hours? What should have been the quantity? That's how we compute. Correct or not? This is always the hidden hero, unsung hero of this chapter. Okay, many people conveniently ignore this. Output, actual output is the base for this chapter, because that is the base for you to compute the standards. Are you clear with this? Fine. Next. Let's say actual hours taken, let's say, is 220 hours. And let's say this includes, actually they have spent 220 hours. This includes 10 hours. Let's say this includes 10 hours of power cut. 10 hours of power cut. Fine. Then the actual rate per hour, the HR guys have paid rupees 9 per hour. Are you clear with this? This is what is the scenario. So every hour you were supposed to pay how much? 10 rupees. And for every unit you were supposed to take how many hours? 2 hours, which means for the actual output of 100 units, you were allowed to take how many hours? 200 hours. But you have actually taken how many hours? 220 hours. And what is the actual rate that I am paying? 9 per hour. And I have also given one small thing. This includes what? 10 hours of power cut. That is the point that I want to drive home in this particular area. Clear with the example? Now, let's get into it. Now, you guys tell me, labor cost variance. Formula. What is the formula? Standard hours into standard rate. Okay, standard rate into standard hours, whatever it is, minus actual hours into actual rate. Correct or not? Now you tell me, what is the standard hours? For the actual output of 100 units, every unit you should have taken 2 hours, which means the total standard hours is going to be how much? 200 hours. Into standard rate is how much, guys? You were allowed to pay them rupees 10. Correct or not? Minus actual hours how much? Now, no, wait, I'll tell you. Now, 210 hours, these workers came to the factory, they were present. They made themselves available, but 10 hours suddenly some power cut happened. Okay, now you tell me, power cut is your inefficiency or the employee's inefficiency? Company's inefficiency, employee's inefficiency. Can you say that you didn't work during the power hit, I will not give you the money? Can you say that? No. So I will pay him even for the hours during the power cut. Correct or not? So I will pay him for the entire 220 hours. Correct guys? Are you clear with this? Into rate, actually I paid was how much? 9. Okay. So tell me, this is how much? 2000 minus 220 into 9 is how much? Oh, the same example only, no? It's 1980. Fine. So this is what? 20 rupees favorable. Guys, 20 favorable, no? You were allowed to incur 2000, you've incurred only 1980, which is what? Which is 20 favorable, guys. Correct or not? Fine. Now, I am classifying this into the multiple segments. First, what segment comes in? Labor, gang variance. Labor, rate, gang variance is what? Is a subset of what? You say your efficiency. Where does this come here? Gang variance will not come here. Anyway, single skill set. Where is the question of gang variance? Gang variance, multi-skill set only should come. Fine. Labor rate variance. Guys, labor rate variance. What's the formula? Come on, who's the responsible guy? Guys, tell it out. Yes. Standard rate minus actual rate into actual hours. Actual hours is what? Entire 220. I will pay him for the entire 220. Can I tell him you didn't work for 10 hours? I will remove that. Can I say Absolutely not. The employees or the workers will get paid for the entire 220 hours. Correct or not, guys? Correct or not, guys? Perfect. Now, what's your standard rate? Hello? 10. Every hour you could have paid 10, but you have paid how much? 9. Is it good for the organization? Is it good for the organization? Correct? No, it's good, no? You have a better deal. As against 10, you have just paid 9 rupees. And on actual hours is how much? 220. So now tell me, how much is this? 220. Adverse, favorable? Favorable. Correct or not? Correct or not? Now, on the other side, I have labor efficiency variance. What is the formula? Formula. Standard hours minus actual hours into standard rate. Correct or not? Now, guys, please don't write anything. I will give you time to write down. Please, very important. Please don't write out anything. Now, you tell me, what is the standard hours in this question? You should have taken 200 hours. You have actually taken how much? Now, you tell me, efficiency variance, what am I doing? I am trying to find out how efficient the employees or the workers were. Correct? When I am trying to gauge their efficiency, if I say that they have taken 220 hours, is it fair? They have finished the work in 210 hours itself, no? Correct? They have finished the work in 210 hours itself, no? Correct or not? Then the 10 hours, what will happen, sir? That you should pin it on the maintenance department. You should pin on the maintenance department. Correct or not? That fellows, they didn't do this proper thing. Maybe the generator was not working properly during the power cut, that they should have taken care of. Can you say it is inefficiency of employees? Definitely not. So what I will do here is, I will call this as actual hours worked. Actual hours worked. How much is actual hours worked? 210, no? 210 into standard rate is how much? Standard rate is how much? That's 10, correct? If I put 9 here, I am transferring the HR's efficiency to him. I can't do that. Correct? So how much is this, guys? How much is this? How much is this? 100. Adverse or favorable? Adverse. Then what happens to the balance? I will introduce something called as labor idle time variance. And that labor idle time variance is nothing but idle time into standard rate. How much is the idle time? 10 hours. Standard rate is how much? 10. How much is this? How much is this? 100. Favorable or adverse? Always idle time variance will be adverse. You need not have this doubt. Idle time, now it's adverse only, no? Correct or not? Now you net off the 3, you get the answer? Yes or no? Yes or no? Does this make sense, guys? Does this make sense? Sir, why am I removing this idle time and keeping it here? If I compare the standard hours with actual hours paid, that is 220, it is a sheer injustice while calculating the efficiency of my workers. So what I do, I compare the standard hours only with the actual hours worked. Only with the actual hours worked. So what is that, sir? The actual hours paid minus actual hours worked. That difference is only your idle time. That idle time will be parked separately. And are you getting this? That gets pinned onto whom? That gets pinned onto this fellow called as maintenance guy. Maintenance department. This is on the HR guys and this is on the production department. Are you clear with this, guys? Are you clear with this? Anyone has any doubt in this area? First tell me, does anyone have any doubt in this area? Yes. So basically, when there is an idle time, 2 actual hours will be there. 2 actual hours will be there. If you see in this question, you have 220 hours, you have 210 hours. Correct or not? 220 hours is nothing but actual hours paid. Correct? Correct? Whereas 210 hours is nothing but actual hours worked. Are you clear? So everywhere in this area, in the labor cost variance on the top, actual hours means what? Actual hours paid only. Anyway, I'm incurring the cost on that. Labor rate variance. Here also it doesn't matter because I'm paying him even for the idle time. But only when I'm calculating the efficiency, I will segregate the hours worked and idle time. Are you clear with this? Are you clear with this? Is everyone clear with this? Is everyone clear with this? And in case it is a multi-skill set, you need to compute what and what? Gang variance and yield variance. That will stem only out of this. Meaning what? Meaning what? In your gang variance and in your yield variance, the actual hours will always be actual hours worked. Are you clear with this? Guys, are you all understanding this? Is everyone understanding this? This is a very important part. Are you all understanding this? This is the only difference between material and labor. But for that, everything is simple. Are you clear with this? Anything that you want me to explain once again, please let me know. Is this clear, guys? Is this clear? So, okay, fine. So now, come on, tell me now. What's the formula for labor cost variance? Standard hours into standard rate minus actual hours into actual rate. Actual hours means full actual hours paid only, correct? This gets branched into ideally 3. In case there is an overtime, ideally 3, correct? Fine. Left hand side, labor rate variance. Who is responsible? HR. Within bracket, standard rate minus actual rate into actual hours. Perfect. Then go to the rightmost part, labor efficiency variance. Now tell me, standard hours minus actual hours worked into standard rate. Why standard rate? Because I am not dependent on the HR fellow. Now, this difference between actual hours paid and actual hours worked is only idle time. I will pin it on the maintenance department, call it as a separate head. Call it as what? Labor idle time variance. Formula is idle time into standard rate. That's always an adverse variance. As simple as that. And your efficiency variance further gets classified into 2 more, gang and yield, that you know what to do. Are you clear with this? With this, your labor cost variances is also sorted. It's also sorted. Learn it with concept, guys. Learn it with concept. See how easy it is and see how practical it is. This happens in a company. Tomorrow you finish your CA, you go to a company, and this will be useful in your real life. There is a team called as FP&A, Financial Planning and Analysis. These guys will be doing this work only, not this accounting work and all. No, accounting is all now automized. It's all automized. So accounting is not a major work nowadays. You need to come up with something on your own. These control aspects, this is where chartered accountants are sought after. And if you don't know this, when to use what? So if someone says, I don't know whether this department is working properly, now you can see what department they are talking about. Oh, production department. Fine. So from material aspect of it, I will use usage variance. From labor aspect, I will use efficiency variance. Done. I will gauge their efficiency. I will tell the top boss whether they are performing in a favorable or an adverse variance. I can quantify the figure and tell them, look, because of this team, you have made so much profit or so much loss. Makes sense? Does it make sense? That should be the level in which you should keep yourself in any organization, wherever you go. In articleship, if you just tell them why you are doing what, that's where the real learning comes. Your principal will be more interested in giving you a lot of analytical works. Routine work and all everyone can do. Look, chartered accountants are not meant for normal accounting. Normal accounting you should know. Why? To supervise your juniors, BCom graduates and all, you will supervise. You should definitely know accounts. But beyond that, all this decision making area, your control aspects and all, that's where we are sought after for. That only we can do. You can't delegate the job to a BCom fellow and ask them to do it. Are you clear with this? So this is a core for us. So whatever you learn it with the concept. It will always help you in your life, wherever you go. Clear with this, guys? Are we clear on this? Fine. So this is exactly what I've given in the material. This is exact. Yep. Yes. Who's that? Nashin. In labor rate variance. Labor gang variance. So what is the formula for labor gang variance? You tell me. Revised actual hours minus actual hours obviously worked only. Actual hours actually worked. Why? Because this is an offroot of efficiency variance only, no? So it has to be only this into standard rate. Similarly, for the other one, it's a balancing figure. So that's why I said for your gang and yield variance, wherever actual hours comes, it is only actual hours worked. Why? Because your daddy uses only what? Actual hours works? No. On the top, it's always your actual hours worked. Correct or not? So even the children will use only actual hours worked. Are you clear with this? So we are operating only on the actual hours worked while gauging the efficiency. Guys, are you all clear with this? Is everyone clear with this? Fine. Yes? Look, again the same logic. So, okay, guys, wait. The question here is, one student is asking me a doubt. Sir, while calculating the labor idle time variance, why should I multiply with standard rate and not actual rate? The answer is same as the logic why we use standard rate in labor efficiency variance. Assume if I put actual rate here, I am passing on the efficiency or inefficiency of the HR guy. Correct? Whereas what am I doing? I am gauging the efficiency of maintenance fellow. For him, what is he responsible for? Only this component. So I will multiply it only with standard rate. Are you clear with this, Darshini? Yes, are you clear with this? That is the reason why we are doing it. Clear, guys? Is everyone clear with the logics? Know it by logic. It will stay with you for a lifetime. So now let's get going with the other one. So shall we move to the next sum? Guys, shall we move to the next sum? Yes? Fine. So let's move to the next sum. So this is exactly what I've given here. If you see it here, labor cost variance, all the formulas I've given. And guys, one very important thing I forgot to tell you. In exam, no doubt you can put it this way, but you should definitely write where SR stands for standard rate, SH stands for standard hours, AR stands for actual rate, and AH stands for actual. You need to write what every abbreviation stands for. You can use SR, SH throughout, provided at the end you write where what stands for what. Yes, if you don't write that, they will cut marks. So I have given it here just for presentation purpose. I want to tell this in the classroom. That's why. Please note it down somewhere. Abbreviations, whenever you give an abbreviations, you need to give a legend. That is, you need to tell them what it stands for. Are you clear with this? Without that, they will not give you marks. So don't go and ask them, sir, I wrote everything, they didn't give you marks. You need to write this. Yes, everywhere you can use a short form, but at least at the end, once you write it fully, write where what it stands for what. Okay, are you clear with this? So this entire formula, whatever I told you only, I put it here. Only I think one difference, idle time came in the middle and the efficiency came on that side. Fine, that's okay. Presentation, you can do it whichever way you want. Are you clear with this? Is everyone clear with this, guys? Shall we move to the next sum? Shall we, guys? Everyone, will you guys answer properly? You have any doubts? Perfect. Very good. Right. So let's get started. Question number 2. It's on page number 25. This sum came in May 19 exam for 10 marks. This sum, the exact same sum, came in May 19 for 10 marks. It's also there in your study material. So let's get started with this. So let's get started. Fine. Okay, fine. Look at this, guys. Please look at this. So now you tell me, for you to compute the labor cost variances, what all figures you need? Standard hours, standard rate, actual hours, actual rate, actual hours worked. Actual hours means actual hours paid, and then actual hours worked. Idle time, then for gang variance, revise the actual hours. Correct. So basically you need what? Standard hours, standard rate, actual hours paid, actual hours worked, idle time. Then you need your actual rate, and then you also need your revised actual hours. Correct or not? But the revised actual hours, we will do it at the time when we are preparing the gang variance and yield variance. Are you clear with this? Is everyone clear with this? Yes, guys. So let's get started with this question. NPX Limited uses standard costing system for the manufacture of its product X. The following is the budgeted data given in relation to labor hours for the manufacture of 1 unit of product X. So what are they saying? For 1 unit of product X, you are allowed what and what and what? Skilled hours 2, semi-skilled hours 3, unskilled hours 5. A total of 10 labor hours you can use per unit. What is this? Per unit they have given. So what will you do? For the actual output, how much they should have spent. This is actually why have they given it? To find out the standard quantity. Correct or not? Correct or not, guys? Correct or not? Is everyone understanding this? And they have also given you what? The standard rate directly. Fine. Next. In the month of Jan 20X1, a total of 10,000 units were produced. Is this data relevant or not? Absolutely relevant. This is the actual quantity of output. Based on this only, I will calculate my standards. Correct or not? Fine. Were produced following other details. Now, what have they given here? Skilled, semi-skilled, unskilled. Hours, rate and amount. This hours is what? Actual hours worked or paid. Actual hours worked or paid. Here they have given some actual idle time below. Okay. This is actual hours worked or actual hours paid. Now I'll tell you what happened. If you take this as actual hours worked, you should add this idle time to arrive at actual hours paid. If you take this as actual hours paid, you need to subtract this idle time to arrive at actual hours worked. Now you tell me, is this actual hours worked or actual hours paid? Actual hours worked, actual hours paid. Who all says actual hours paid? Okay. What about you? Rohini? No? Roshni or Rohini? I mean, yeah, okay, Rohini. Okay, fine. Okay, who all say it's actual hours worked? You didn't say anything, so you have to raise up your hand. No, don't say you don't know. You at least have some idea, no? Just come up with it, it's okay. What do you think? What do you think? Come on, guys. Make it fast. Who all think it's actual hours worked? Actual hours worked. Okay, so Rohini says it's actual hours worked. Anyone else? Anyone else? Online folks? Anyone else? Anyone? Now, this is actual hours paid. Assumption? No, not an assumption. Can anyone tell me? They have arrived at the amount. When will you arrive at the amount? Only with respect to the hours paid, Rohini, are you getting it? Rohini, are you getting it? They have given the amount. They have multiplied this hours, actual hours with actual rate. Meaning what? This is actual hours paid only, no? Correct? Because you are going to pay for whatever hours he was inside the factory. Correct or not? Since they are giving this as an amount, definitely this only means it's actual hours paid. Are you clear with this, Rohini? Yes, you are understanding this. Everyone, this doubt, if you're not having it today, maybe in the exam hall you might have it. That's why I'm clarifying it. Are you clear with this? Are you clear with this? And they're also giving you the actual idle hours. That's your abnormal idle hours. They have given you the skill set wise. Calculate the labor variances. Shall we do it? Shall we do it, guys? Shall we? Yes? Let's get started. Let's get started. Let's get started. So this is what? Question number 2. So tell me, question number 2 is the page number? 25. Okay, so this is your standard costing chapter. Fine. So this was a 10-mark exam question. Now it's an easy thing for you. It's an easy thing for you. Be careful when you are doing. That's all. No catches in this sum. Nothing great is there. That's about it. That's about it. The only catch was whether that is actual as worked or paid. That alone some students might make a mistake. That's all. If you make a mistake there, just imagine you will get the labor cost variance correct. You will get the labor rate variance also correct. You will get the idle time variance also correct, because idle time they have already given it. Labor efficiency variance and its 2 branches, you will get it wrong, because there you would have got a different answer. Clear with this? Clear with this? So out of a 10-mark question, you can't expect them to give you more than 3 to 4 marks. That's all they will give you. Clear with this? Clear with this, guys? Please have this in your mind. This is the power of observation. Power of observation. Was there any concept that I just told you? No. Small little observation can make a lot of difference. Fine. So let's get started. Let's get started. Come on. Fine. Now write down. So as the same thing as it goes, let's make it the same way. Let's make it the same way. Wait, I will first give you the template. Particulars. Wait. I'll give you the template. Maybe then you can write down. Standard. In that you will write standard hours, standard rate, and amount. Then what? Actuals. Actual hours paid, actual rate, and amount. So under this dabba, what we will do is actual hours paid minus idle time, actual hours work, that we will separately calculate and keep. Okay. So what we are doing, we are just taking and keeping all the ingredients ready, so that directly it's a plug and play. That's all. Plug and play model. Clear with this? 10 marks, standard costing, marginal costing, these chapters are all not time consuming to solve in the exam. It requires very good knowledge on the concept. If you have that, you can solve it easily. Whereas I will not say this for overheads and ABC. Overheads and ABC, even if you have a lot of conceptual knowledge, you need time to do the calculation and solve it. It takes time in the exam. So if you save some time in this concepts and all, in these questions, you can use that for your overheads and ABC chapter. Have this, use these kind of hacks. Are you clear with this? Fine. So let's get started here, guys. Come on, please drop this template. Please drop this template. Come on, make it fast. Let's drop this template, shall we? Guys, are you guys doing it? Oh, done now? Fine, very good, fine. Shall we proceed, guys? Fine. So first, what are the 3 categories of labor that we've got in the sum? Guys, I want everyone to answer. Skilled, semi-skilled, unskilled. I am using the short form S, SS and US. Okay. For our classroom discussion, it's fine. Please don't follow this in exam. Classroom discussion, short forms are fine. Don't use it for exam. Right? Now, fine. Okay. Right. Very good. And know one more thing. When it comes to labor, will there be that loss and all? Loss. In the previous sum we did no A, B, C, input, loss, output. That concept is not there in your labor. Correct or not? How can you stock your labor? How can you say it's loss and all? No. That's why we have an idle time variance that takes care of it. Are you clear with it? So it's always, after this, it's only a total column. Are you clear with this? After this, it's a total column. Fine. Now guys, come on. Shall we get started with this? Now, standard hours. How much is this? How do you find out? Wait, I'm just going to the other one. Now, actual units is how much? 10,000. Correct? So, skilled per unit you are allowed to use 2 hours, which means 2 into 10,000 is going to be 20,000, 30,000 and 50,000. Correct or not? Guys, correct or not? Just do it here. Write down. Write down, guys. 20,000 hours. Then 30,000 hours. Then it's going to be 50,000 hours. Correct? Then it's going to be 50,000 hours. Fine. Right. 50,000 hours. Okay. Then standard rate. How much? Given. 6, 4, 3. 3. Fine. Next, actual hours paid. Given. 1,20,000. Sorry, I'm sorry. What is the actual? Okay, you are doing this. Okay, fine. Let's do this. 1,20,000. Then. Once again, 1,20,000. Then it's going to be 1,50,000. 1,50,000. Correct? Fine. And then you can total these two also. So what is this? This is 1 lakh. This is 1 lakh. Total hours used, because these people are coming together and only working, and we will need this to find out the proportion and all. Yes, we need this. We can add these hours. And here the amount column. What is the total? 3,90,000. Right. Very good. Next, actual hours paid. How much? 18,000 hours. 33,000 hours. Pick it up from the question. Then 58,000. What's the total actual hours? Total actual hours 109,000. Why will we need this? When we are doing this revised actual hours, this will be the base on which we will compute the standard mix and all. Remember? Yes. Fine. Next, actual rate. How is it 744? Okay, fine. Guys, 1 minute. One small thing. I'm really sorry. Please change this to 3.5. There was a typo error. Please change this to 3.5. Sorry. Yes. Please change this to 3.5. I think some students have already done the question. Please. Really sorry for that. That's a typo error. Just now I observed it. I'm really sorry. I should have. I know some students have already done the question. They are waiting for me to take the next concept, or I don't know, next chapter itself. Okay, fine. Right. Okay, fine. But anyways, please change it. Now, anyways, you have to redo. So let's do it together now. Fine. So actual hours, actual rate. What's your actual rate now? 3.5, and here it's going to be how much? 4. Now what's your rupee value? That's also given there. 1,26,000. 1,15,500 and 2,32,000. Figure total 473,500. Correct or not? 473,500. Correct or not? Yes, guys. Fine. You got this dabba. Now shall we directly go to the formulas? No. What we need to do? Actual hours paid minus idle time will give you what? Actual hours worked. That also we will do, because we need that for what? Efficiency variance. Clear? So let's do that also. So write down here particulars and just 2 columns. Or maybe we can write 3 columns. Actual hours paid. Actual hours paid. Idle time. Actual hours worked. I'm scribbling literally. Fine. Actual hours paid, idle time, and actual hours worked. Clear, guys? Clear? Done? Now tell me, skilled, semi-skilled, and unskilled. Actual hours paid, how much? Just now we just did it. 18,000, 33,000, and 58,000. What's the total? 1,09,000. Right? 1,09,000. Right, perfect. What's the idle time given? 500. Guys, everyone answer. No, why only one student is answering? 700 and 800 and 800. Fine. So this is a total of how many hours? 2000 hours. Now, actual hours worked is how much? 18,000 minus 500, 17,500. 33,000 minus 700, 23,300. Sorry, 33,300. Sorry, 32,300. 32,300. Sorry, my bad. 32,300. Then this is going to be 57,200, right? 57,200. So what's your total? What's your total? 1,07,000. So horizontally, vertically, whichever way you want to calculate, it should tally. Correct or not? So 1,09,000 minus 2,000 is 1,07,000, or 17,500 plus 32,300 plus 57,200 will also give you the same answer. Clear with this? Now with this, we can draw the tree and finish it off. Yes, clear with this? Clear with this? Come on, let's make it fast. Let's make it fast. Come on, do it. Fine. So first. Come on, guys. Labor cost variance formula. Don't look back. Don't look back. Write it on your own. Write it on your own. Tell me formula. Come on. Standard hours into standard rate minus actual hours into actual rate. Correct or not? Yes. Actual hours into actual rate. I think we've already done this on the top. That is standard hours into standard rate. Total we have got it here already. 3,90,000. Correct or not? Actual hours into actual rate, we've already got this. 4,73,500. So shall we just plug it here? Shall we just plug it here? Tell me how much minus how much? 3,93,000. 90,000 minus 4,73,500. Okay, fine. So you were allowed to spend 3,90,000. You spend something more. So adverse, favorable. Adverse, how much? 83,500. Are you clear with this? The topmost granddaddy is ready. Correct? So now we just have to branch it and finish the other figures. Clear with this, guys? Clear with this? Shall we proceed further? Shall we proceed further? Now, branch this into, ideally it should be 3. Branch this into 3. Why 3? Because we have idle time also. So since we know it already, let's branch it into 3 at the beginning itself. What, and what? Labor rate variance on the right extreme corner, labor efficiency variance, and in between labor idle time variance. Are you clear with this? I hope the short form and all you guys are getting it. Yes or no? That's why I've given it in the material that I've printed. I've given it fully. Labor cost variance. What that is, I've given you fully. So yes, labor rate variance formula. Standard rate minus actual rate into actual hours. Tell me, first skilled. Now go to the top dabba, skilled, standard rate, how much? Rate. 6 minus actual rate, 7 into actual hours. This actual hours is what? Actual hours paid only, no. This actual hours is actual hours paid only, no. Rate variance. HR will pay for, even for the hours that he was sitting in the dark, no. Dark means what? Power cut. So he was sitting in the power cut, for that also I will pay him, correct? So hours paid. What is actual hours paid? Hello. How much is that? 18,000. Figure. This is going to be 18,000. Favorable, adverse? Adverse. Very good. Next. Semi-skilled. How much minus how much? 4 minus 3.5 into what? 33,000. How much is that? 16,500. Adverse, favorable. Right. Next, unskilled. So tell me, what is it? So how much is that? 3 minus 4 into what? 58,000. Okay, fine. So into 58,000. So how much is that? 58,000. Adverse. So all the 3 sum it together. Net is what? Adverse only, no? Adverse, how much? 58 plus 18 minus 16.5. How much is that? Come on. Calculate. Pick up your speed. Please pick up your speed. 59,500 adverse. 59,500 adverse. Are you clear with this? Are you able to understand? Everyone, are you all able to follow? Are you all able to formula? You guys are doing it. Yes, you guys are also doing it. Yes. Fine. Everyone is able to follow this, guys. Very good. Very good. Now let's go to the extreme right. Let's go to the extreme right. What's the extreme right? That's your labor efficiency variance. And guys, online folks, is the screen visible? Is the screen visible for you? You can see? Yes. Fine. Right. Now, labor efficiency variance. What's the formula, guys? Standard hours minus actual hours worked. Actual hours worked into standard rate. Correct or not? Similar thing. Skilled. Standard hours, how much? Standard hours, how much? 20,000 minus actual hours worked, 17,500 into standard rate. How much? How much? 6. How much is this? 15,000 favorable. Why is it favorable? Why is it favorable? You were allowed to take 20,000 hours, but you just finished the job in 17,500 hours. Are you clear with this? Next, semi-skilled. Let's move to the next one. 30,000, 30, right? 30,000 minus 32,300. These guys have taken more. Into what? 4. How much is that? 9,200 adverse. Fine. Very good. Next. Unskilled. Fine. So tell me. 50,000 minus 57,200, right? Into what? Into 3. How much is that? 21,600 adverse. 21,600 adverse. So net of the 3, how much you get? How much is that? 15,800. Correct? Adverse. Correct? Now immediately come to the middle part. What is the middle part? Idle time variance. What is the formula? Simple. Idle time into standard rate. So skilled. What is idle time? What's the idle time, guys? 500, right? 500 into standard rate. 6. How much is that? 3,000. Favorable, adverse. Always adverse. In this variance alone, there will not be any favorable. How can there be a favorable idle time? No, there can't be. Next, semi-skilled. What? 700 into 4. How much is that? 2,800 adverse. Next. Unskilled. 800 into 3. That's going to be 2,400 adverse. What's the total? 8,200 adverse. So immediately what will you do? Add the 3 and C. It should be equal to 83,500. Is it tallying? See, you don't have this luxury in all the chapters. This chapter is helping you to verify your answer also. Are you clear with this? Guys, is everyone following it? Rohini, you got it now? Yes, you are understanding. Others, Guru, Murali, Praveen, everyone, Nikita, everyone, you guys are understanding. Darshini, Kavya, Madhu, everyone. You guys are all understanding? Yes. Guys, you guys are understanding here? Yes. Online folks, fine. Is everyone understanding? Great. Now, are we done with the question? No. Why? This question is about a multi-skill set, which means the labor efficiency variance has to be further classified into gang variance and yield variance. Okay, so that's what we are going to do right now. This is something that we've already done in our material cost variance, a similar thing that we are going to do here. Shall we do this together? Yes. So take the extreme, go to the extreme left of the page. So maybe this, you can use the full width of your page, so you can do this. So what's the variance that we're going to do right now? Labor gang variance. It's also called as labor mix variance. Generally, it's called as labor gang. You can also use the word mix. Since HR, human resource, people related, it's called as gang. Mix is also a right usage only. So in your study material, alternatively, they would have used. Similarly, one more thing I want to tell you. We saw that mix, that yield variance, labor yield variance and material yield variance. Material yield variance has another name. It's called as material sub-usage variance. Under usage variance only it is coming, no? So it's called as sub-usage variance. Similarly, if it is in labor yield variance is called as sub-efficiency variance. Labor sub-efficiency variance. So if they ask for sub-efficiency variance, don't think we haven't covered. It's nothing but your yield variance only. Please note it down somewhere. In your labor, okay, maybe you can write it down here. Yield variance is also called as sub-efficiency variance, whereas here material yield variance is also called as sub-usage variance. Why, sir? Why is it important? At times in exam, if they give you this missing figure sum, if they give you material sub-usage variance, you might not know what it is. That is the reason why I am telling you. Clear, guys? Material yield variance is called as material sub-usage variance, and labor yield variance is called as labor sub-efficiency variance. Are you clear with this? Yes, you guys are clear with this? Fine. Now let's go to this labor gang variance. Guys, tell me the formula. Revised actual hours minus actual hours into what? Standard rate. So now can we start putting the dabba? So open this dabba, open this tabular column, revised actual hours, standard rate, and then you get your what? Labor gang variance. Now tell me, first type of skill set is what? Skilled, semi-skilled and unskilled. Skilled, semi-skilled, unskilled. Now guys, tell me, which column will you fill first? Actual hours. How much? And wait. This actual hours is always actual hours worked. Yes, someone asked me, Rohini asked me this doubt. It's always actual hours worked because we are talking only about efficiency variance. Under that only it comes. Are you clear with this? Any doubts here? So now tell me, actual hours worked. How much? Sorry? 17,500, 32,300 and 57,200. What's the total? Guys? What's the total? 1,07,000, right? I have actually used 1,07,000, correct? So now what will I do here? I will put 1,07,000 here. But ideally, this 1,07,000 I should have utilized in what ratio? Let me just go up and tell you. It should have been in the ratio of 2:3:5. Correct or not? 2:3:5 only, no? Correct or not? So split this in the ratio of 2:3:5. So this should be in the ratio of 2:3:5. So how will you do this? 1,07,000 divided by 10 into 2 is equal to write down, 3 is equal to write down, 5 is equal to write down. How much, guys? 21,400, 32,100. Then 53,500. Correct? You are getting it, guys? Are you guys getting this? Is everyone getting this? Now go to your standard rate. What's your standard rate? Come on, pick it up. 643. And now you tell me your gang variance. You were allowed to take 21,400, but you've actually taken only lesser, so it's going to be a favorable variance by how much? Yes. How much is that? 3,000? 3,900, favorable, adverse. What happened? This is correct only, no? 3,900? Sorry. 1 second. 21,400 minus 17,500 into 6. 23,400. No, in 3,900. Yes, 23,400. Why I took this? I don't even know. Okay. 23,400. Adverse or favorable? It's going to be favorable. Right. Next. 32,100 minus 32,300 into 4. How much, guys? It's going to be how much? How much is that? 800. 800. Adverse, favorable? Adverse. Next to 53,500 minus 57,200 into 3. 11,100. Adverse or favorable? Adverse. Net of it is adverse or favorable. Net is favorable only. How much? 11,500 favorable. Are you getting this? So now the other side of this question is going to be what? Labor yield variance, also called as sub-efficiency variance. Formula: standard hours minus revised actual hours into standard rate. Fine. So now S, SS and US. Standard hours, how much? 20,000 minus revised actual hours, 21,400 into standard rate 6. How much is that? 8,400. Adverse or favorable? adverse. One second, I'm sorry. Yes, adverse. Yes, adverse. Next, semi-skilled. 30,000, 30,000 minus 32,100, into what? 4. How much is that? 8,400. Again, 8,400 adverse. Next, 50,000 minus 53,500 into what? Into 3. How much is that? 10,500 adverse. So how much is this? 27,300 adverse. So if you add these two, do you get 15,800? If you add 11,500 favorable and 27,300, add means what? Net off the two. Do you get this? Sorry. Yes, do you get this, guys? 27,300 minus 11,500 is going to be 15,800 adverse. Correct. This is a favorable one. This is an adverse one. So it has to be netted off against each other. Are you clear with this? Guys, are you all understanding? Yes? You guys are understanding this? Yes? Right? Perfect. You guys are understanding this? So tell me, what is the formula for labor efficiency variance? Standard hours minus actual hours worked into standard rate. Very good. What is the formula for labor rate variance? Standard rate minus actual rate into actual hours, full actual hours paid. Okay, clear with this? Fine. And gang and yield variance, you know, it comes below that. Are you clear with this, guys? Yes. Are you getting the comfort right now? Now tell me, is standard costing difficult? Is standard costing difficult? Still you are not saying no. Okay, whatever you feel like, say, tell me now at least yes or no. You tell me something. Is it understandable or not? Yes. Is it difficult? Is it difficult? You still have the feeling it's difficult? Yes. No. Especially you. Yes. Are you convinced that you need not mug up formulas here? Yes. Clear with this, guys. Clear with this. That's about it. It's very, very simple. It's very, very simple and straightforward. Are you clear with this? Shall we proceed to the next area? Next area, we'll just finish it in a jiffy, and then our main focus is on fixed overheads. That's where the part is. Fixed overheads, I'll tell you. Logic to the extent relevant for you, I will tell you. Beyond that, I will just tell you what to remember. You just do it, because if I start that explanation, I will have to link something from the sales variance also, which is not applicable for your syllabus. That discussion alone will take a lot of time. We don't have the luxury of time here. Even in my regular batch, generally, I don't explain that much because it's not required. That's not required. But that is also 100% conceptual. What is the concept and all, I'll tell you. Only in certain areas, I'll tell you what to do and leave it there. Clear with this? Let's strike a balance. You should know where to deep dive and where to just stay on the top. That you should know to strike a balance. So let's get going with the next area. Hello, guys. Shall we? Hello. Yes. Shall we proceed? To the next one? Yes. So go to segment 3 of this chapter. What's the segment 3? Hello? Guys, what's the segment 3 of this chapter? Yes. Segment 3 of this chapter is variable overhead cost variances. Now, have one thing in your mind. Here, what they mean by variable overheads. In cost sheet, you would have seen some direct expenses, no? Like power and fuel and all. That only they are calling as variable overheads. Why, sir, you're calling it overheads? Overheads means it should be come under absorption route. Now, that's why I said that's a product cost, period cost classification. Park it there. This is from a different perspective. We are achieving the objective of control. So here what they are talking about is those direct expense item, no, like power and fuel and all. It varies along with your output. Correct or not? So that is the reason why they are talking about this area in variable overheads. Because apart from very handful of expenses, everything else is indirect only. That is fixed only, no. Let's say factory rent, depreciation, these are all fixed, right? These are all fixed. This will come only under the fixed overhead category. Now, you tell me, if I run the machine for many number of hours, my variable overheads will be more. Correct or not? Example, power cost. If I run my machine for more number of hours, the power cost will be more. Correct? If I run my machine for lesser number of hours, the power cost will be less. Correct or not? Basically, this variable overhead is predominantly driven by the hours. Correct or not? Now what hours? What hours? I will say it's labor hours. Why? Because only for the labor hours that they are working, the machine is also on now. Guys, correct or not? Only for the labor hours they are working, the machine will be turned on. Correct or not? And only when the machine is turned on, I will incur variable overheads. Correct or not? Correct or not? Correct or not? Are you getting it? Are you getting it? So in this case also, we will use ditto the same formula as we saw in our labor variances. Ditto same. One change is you will not have a concept called idle time. That is number one. Number two, here actual hours always means actual hours worked. Why? Because only for the actual hours they are working, the machine will be turned on now. And only when it is turned on, I will actually spend my cost. Correct or not? Here there is no actual hours paid, actual hours worked and all. It's only actual hours stands for actual hours worked only. Are you clear with this? Guys, are you all getting the concept? So in a comprehensive sum, if they ask for labor variance as well as for variable overhead variance, you should know that for the purpose of variable overhead variance, you should take only the actual hours worked throughout. There is no concept of actual hours paid and all. For idle time, power shutdown, will the machine run? When it runs, only I will incur a cost, no? Correct or not? It's a variable cost. Correct or not? If it is not running, why will I incur the cost? Are you clear with this? Are you clear with this? Now, straight away, tell me the formula, guys. Come on. Variable overhead cost variance. What is the formula? Standard hours into standard rate minus actual hours into actual rate. Correct? So, you should have consumed only so many number of hours, and each hour you should have paid what? That electricity fellow, you should have paid 10 rupees. Correct or not? Maybe per hour you should have paid. But actually I have consumed so many number of hours, and every hour I have paid him something else. This is what is the comparison. That is the standard variable overhead cost minus my actual variable overhead cost. This is what we are comparing. Are you clear with this? Are you clear with this? Now this has two segments to it. Similar to what we saw here. There we saw labor rate variance. Here it is not a rate. We call it as, labor quota. 1 second. Here we call it as variable overhead expenditure variance. It's an expenditure only, no? Correct or not? It's an expenditure only, no? Now, who is responsible for this expenditure? The maintenance guy. Why is the maintenance guy responsible? He only has to negotiate with the power department, no? Now, don't tell me, sir, I have never negotiated with the power AEB guys and all. They only charge me. No. We are all doing this residential. This is also commercial. This is not in our power. But these guys, what they use is industrial license they have. So they have the, they have the power to negotiate and all. They have given some powers. That is there with them. That's why we are talking about that. You and I cannot go and tell the government every month I'm using 200 units. For that, you give me some discount and all. No. That is not possible. But these guys can do. Even service industry can't do, because it's not machine driven. Only these heavy production oriented companies, yes, they all have a separate line that goes for them, because that requires a lot of load and all. If you go to that, if you use that load, whatever power they are using to run their machines, if you plug your charger, your mobile phone will burst only, because the load, the tension with which it comes will be very huge, because it has to pull a lot of power and run the machine. So that's the reason. Now, variable overhead expenditure variance. Who is responsible? Maintenance guy. What is he responsible for? Rate. So what comes inside? Standard rate minus actual rate into what? Actual hours. Who is responsible for the hours? The same production manager. So whatever happens, this side of the chart, always the same guy is only responsible. The production manager is only responsible. Only at the left hand side, people keep changing. For men may come and men may go, I go on forever. So this guy, production manager, every time this guy only gets handled. Are you clear with this? Now what's your other one? It's called as variable overhead efficiency variance. It's the same. Variable overhead efficiency variance. What's the formula? Standard hours minus actual hours into standard rate. Why standard rate? Because I am not dependent on the maintenance guy. I am only responsible for the hours. Are you clear with this? Are you clear with this? And this efficiency variance, further classifying and all, no. Power, super power, multi-power and all is not there. Only one type of power is there. Okay, clear with this? So you don't have this variance, you don't have this multiple further two limbs and all are not there. That's about your variable overhead cost variance. Are you clear with this? And you should always remember actual hours means actual hours worked. Logic, only for the hours you're working, you will incur the variable overhead cost. As simple as that. Whereas this is not the case for labor. For labor, even for the idle time, I will pay no. That's why on the top I take actual hours paid. But only by calculating the efficiency, I say it's actual hours worked. Are you clear with this? Know this concept, guys. Know this concept. It's going to be very easy. You can play around with this chapter, I'm telling you. Missing figures and all, whatever they give. If you know the formula, put this chart, plug the figures, you know what is missing and you can easily find out. That is the importance of this conceptual learning. Are you all clear with this? Are you all clear with this? Fine. Done with this. This exact same thing, I think I've given it already in your material. The same thing I've given it to you, and I've also given this variable overhead cost variances. AH always represents AH worked. I've given you that. Okay, are you clear with this? Shall we directly get into one small sum and finish this off? Shall we do it, guys? Shall we do it? Quickly, let's finish it off, and then the balance time I want to spend on your fixed overhead variance. After that, this chapter will get over. That's all. That's all. Literally, if you see, out of 4 variances, we have covered 3. 75% of the chapter is already over. Clear? Clear. Tell yourself that. Tell yourself that it's easy. It's definitely easy. People will say it's difficult and all. Don't even pay heed to that. If you want, ask them to sit and you explain them the concept. Now they will also say it's easy. Fine. Okay, right? Come on, let's go to question number 3. Let's go to question number 3. It's on page number 26. Question number 3 on page number 26. Now this is fairly a simple sum, but you just need to watch out. You just need to be a little observant. Let's see how many of you guys are getting it right. No, it's a plain sum. It's a plain sum. Nothing, no catches or not. By this time, I would expect you guys to get this answer properly. Okay, fine. Now, question number 3. From the following information of G Limited, calculate the variable overhead cost variance, expenditure and efficiency variance. Fine. Look at this, look at this, look at this. Budgeted production. Read the wordings carefully. Budgeted production, 6,000 units. Budgeted variable overheads, 1,20,000. Standard time for 1 unit of output, 2 hours. Actual production, 5,900 units. Actual overhead incurred, 1,22,000. Actual hours worked, 11,600. Correct? Now, for me to calculate the variable overhead variances, how many figures I need? How many figures I need? 4. What are the figures? Standard hours, standard rate. Actual hours, actual rate. Now, out of these 4, 1 figure alone I will tell you. Other 3 figures you should tell me. What figure I am going to tell you? Actual hours. Very excellent guess. Fine. So, actual hours 11,600. How did we know? It's given. So, that's why I am doing it. Fine. Other 3, do it and tell me in the next 30 seconds. Not beyond that. Do it and tell me in the next 30 seconds. Make it fast. Make it fast. Make it fast. Put your brains to work, guys. Don't depend on me for the answer. Exam, you are left alone. Exam, you are left alone. Do it by yourself. And get that little satisfaction, yay, that you got it right. Yes, that you should get. Yes, come on, come on, come on. Do it fast, do it fast. Done? Done? Oh, very good. So many people have completed. Tell me, standard hours. Guys, standard hours. Standard hours. How much? 11,800. Yes, you also got last 2. You also got 11,800. You're doing it now. You got it already. 11,800. Everyone got 11,800. Excellent. 11,800. How you got that? How you got that? Every unit you can take 2 hours. What is the hero? Actual production. For me to complete 5,900 units, I could have taken 2 into 5,900. Are you clear with this? Very good. Standard rate. Standard rate. Standard rate. Standard rate means what? Per unit or per hour? Huh? Where did unit come from? Throughout we are talking only about hours, no? Correct. So per hour, how much is it? Huh? 10. Any other answer? No. What is the answer? Huh? What did you get? You tell me. You tell me what answer you got. It's okay if it's wrong. So how, okay, then what else do you think will come? You are saying how will it come to? Standard rate is how much is what I'm asking. Standard rate, online folks, standard rate is 10. Very good, 10. How is it 10? How is it 10? How did you get standard rate? Budgeted overheads divided by budgeted hours. So what is your budgeted hours? Budgeted production, 6,000 units into standard time per unit. Can I say my budgeted hours is 12,000? Correct or not? Correct or not? And my budgeted overheads is how much? 1,20,000. So 1,20,000 divided by 12,000. Standard rate is 10. Are you clear with this? Now you're understanding. Yes, others, everyone. Very good. Most of the students got it right. AH, I already told you out of generosity. So gentlemen. So AR, actual rate. So what's your actual rate? 10 point. Excellent. Very good. 10.5172, whatever that is. How did you get? Very simple. Actual overheads divided by actual hours. That is 1,22,000 divided by 11,600, and you get this. Once you get these four components, what's the big deal? Plug and play. That's all. Plug and play. That's all. Yes. Clear with this, guys. Clear with this. Everyone got this. You're understanding? Everyone, you're understanding the one next to you. Yes, you're understanding. Yes, Puriyar Daida. Is everyone understanding? Yes, guys. Fine. Let's quickly finish this off. Wrap up the sum. Let's quickly wrap up the sum. Yep. Let's quickly wrap up the sum. Come on, guys. Question number 3 on page number what? What is the page number? Yes, question number 3 is on page number 26. Page number 26. So what do you do now? First, the ingredients you write down. Guys, come on. Standard hours. Standard hours. How do you get the standard hours? How do you get the standard hours? It's nothing but 5,900 units. Each units require 2 hours. So what's your standard hours? Guys, please answer. 11,008. It's okay if you've already answered. Still you answer. It's okay, no? It's okay, no? Fine. Can I say I have already taught this in my regular batch? I can't teach it right now. Do I ever say that? I am again and again repeating, no? Yes, please do it. Please. Yes, standard hours. Then. Standard rate. What's your standard rate? What's your standard rate? Rupees 10 per hour. How did you get this? How did you get this? What's your budgeted overheads? Rupees 1,20,000 divided by what's your budgeted hours? 6,000 units each should have used how much? 2 hours. So this is how you got it. Are you clear? Every single figure you should tell them how you got it. That's when you will get the marks. Next. Actual hours. How much is this? 11,600 hours. Within bracket, please write down given. I know it might sound lame for you, but no. How did you get this figure? Given. You are telling the examiner. One look, if he looks at it itself, he will know. Okay, fine. The student has got it right. These 3 things he has computed. This one thing is picked from the question correctly. Yes. This is the way of presentation. Next. Actual rate. What is that? Rupees 10.5172. Please retain the decimals in your calculator. Yes, this is actual rate per hour, obviously. How did you get this? 1,22,000 actual overheads divided by actual hours of 11,600. Correct or not? Hello, guys. Yes. Fine. Yes. With this, we got these 4 ingredients. Shall we get started with this this branch, this tree thing? Can we just do it? Yes. So come on. First thing. Come on. What is first? Guys, variable overhead cost variance formula. Standard hours into standard rate. Actual hours into actual rate. Plug and play. That's all. Standard hours, how much? 11,800. Standard rate, how much? 10. Actual hours, how much? 11,600 into actual rate, 10.5172. So how much? 1,18,000 is the cost that you should have incurred minus. What is the cost you've actually incurred? 1,22,000. Fine. So adverse, favorable. Adverse, how much? 4,000. Yes. Correct, guys. Are you all understanding this? Now, this gets branched into how much and how much? 2 things. 2 aspects. What and what? So, variable overhead, expenditure variance, and variable overhead, efficiency variance. Formula. Standard rate minus actual rate into actual hours dependent on production fellow. Now standard rate, how much? How much? 10. But I've actually paid for every hour, how much? 10.5172. Please keep the entire decimals in your calculator. If you just put 10.5172, it will not match. Fine. Into how much? Actual hours. Evlo actual hours irukku? Okay, so 11,600. How much is this? 6,000 adverse. 6,000 adverse. Now here variable overhead efficiency variance formula. Standard hours minus actual hours into standard rate. How much? 11,800 minus 11,600 into what? 10. How much is that? 2,000 favorable. Okay. And if you net these two off, you get what? 4,000 adverse. Right? Done. Simple, guys. Easy. Fair enough. Variable overhead is very simple. You don't have anything apart from that. Maximum possible complication itself is only so much. Plain, vanilla, no flavoring and all. Very simple. Direct. Straightforward. Okay. Shall we move to the next one? The part of this chapter. Fixed overhead cost variances. Shall we go to that? Shall we go to that? After we finish fixed overhead cost variance, we'll take a break. Okay. After we finish this segment, we will take a break. Once we come from the break, we will start with service costing. Fine. Let us see whatever happens. Fine. Let us see. Let's take it as it comes. But this is the agenda. Clear with this, guys? Are you all understanding whatever we just did right now? Till now, whatever we've done, you guys are understanding? Excellent. Very good. So now let's get started with this next segment called as fixed overhead cost variance. Now this is one area which is relatively complicated. I will say relatively complicated. Complication doesn't mean difficult. It doesn't mean difficult. It means it has some inside concepts that you need to know. Whatever extent is relevant for you, I will tell you. Whatever extent is not relevant, you have to trust me. Fine. That's all I ask for. Most of the areas I will discuss conceptually. Only one or two areas I'll tell you why it has come and I'll leave it there on the face, because for me to explain that, I will have to go touch the sales variances, and sales variances is not there in your syllabus. That's a waste of time. So I don't want to do that. Okay, clear? But in old syllabus, sales variance was also there. For you and all, it's not there. So let's not waste much time into it. So we will strike a balance here. Now, okay, fine. Now, we are in the segment 4 of the chapter called as fixed overhead cost variances. Fixed overhead cost variances. First, you tell me guys, I'm telling you that fixed overheads, budget actuals. Let's say budgeted fixed overheads was rupees 1 lakh. Okay. And I had a budgeted output of, let us say, 10,000 units. Okay. Actual fixed overheads was, let's say, rupees 96,000. And the actual output, how much I said earlier? 8,000 or 10,000? 8,000 la? I said 8,000, correct? 8,000 units. Yes, let's take the same example. But in this, there is only one difference. This entire 1 lakh, this entire 96,000 are fixed overheads only. Now, you tell me, can I compare this 1 lakh with 96,000? Can I compare this 1 lakh with 96,000? Can I compare this 1 lakh with 96,000? How many of you say no? How many of you say no? What? Raise your hands. Some people said no. Please raise your hands. If you own your opinion, learn to own your opinion. It's okay even if it's wrong. How many of you say it's no? Oh, so how many of you say it's yes? Oh, great. So the entire class says it's yes. Okay, fine. So what one student is saying that this 1 lakh cannot be compared with 96,000. Reason, this 1 lakh pertains to 10,000 units, but this 96,000 pertains to 8,000 units. Hello, please. You tell me, what is this cost? Fixed cost. What is the nature of fixed cost? Remains constant irrespective of my output level. Can I say, if you reduce the output to 8,000, I will pay lesser factory rent every month? I am going to pay, let's assume this is factory rent. I need to pay that landlord 1 lakh rupees. Whether I produce 10,000 units or 8,000 units, correct or not? Correct or not? Correct or not? So, when we are talking about a fixed overhead cost variance, there is no question of standard. There is no question of standard. No question of standard. Are you clear with this? No question of standard. Are you clear with this? Are you clear with this? The budgets can be directly compared with actuals. Are you clear with this? First thing, are you clear with this? This is where I'm telling you, fixed overheads is slightly different from the other areas. First, are you understanding this? Yes, now you are clarified. Now your doubt is clarified. You can compare budget with actuals provided it's exclusively a fixed cost. Are you clear with this? This is why in our overheads we said the nature of fixed cost, variable cost and all. You remember? Fine. Are you clear with this, guys? Right? Fine. Now let's get into this area called as fixed overhead cost variance. Now carefully listen. Fixed overhead cost variance is equal to absorbed fixed overheads minus actual fixed overheads. Absorbed fixed overheads minus actual fixed overheads. You guys tell me, when I compare absorbed with actuals, what is it called? Under or over absorption. So basically, fixed overhead cost variance is nothing but your under or over absorption. Are you clear with this? So this area does not talk about standard with actuals or budget with actuals. This area talks about absorbed versus actual. Nothing but fixed overhead cost variance is nothing but your under absorption or over absorption. Please write it down somewhere. This entire variance stands for under absorption or over absorption. Can you see this link? Can you see this link to the overheads chapter that we saw? Yes, can you see this link to the overheads chapter that we saw? This is like your Vikram movie link to Kaidi and all, no? That and all we enjoy, this we don't enjoy. Fine? Okay, fine. Right. Fine, correct or not? Fine, it's linked, guys. It's linked. That under or over absorption is only coming here once again. Special appearance, guest appearance towards the last end climax. Fourth part only, no? Fourth part, last only it has come, no? All this twist and things. Fine, okay, right. Okay, right. Clear with this? Maybe if you go to final, then sales variance will come, then we will link this also. That will be Vikram part 3, 4, whatever it is. But yes, now you are understanding this. Guys, please come back. Fine, right. Please. Are you understanding this? So what does this talk about? Guys? What does this variance talk about? Under or over absorption. And whenever I say under or over absorption, it's a comparison between absorbed and actuals. Are you clear with this? So what they are saying here is, this is nothing but standard hours into standard rate minus actual fixed overheads. Are you clear with this? Standard hours into standard rate minus actual fixed overheads. Now, you might be having a doubt. How, sir? How is it standard hours into standard rate? You told me when I am charging overheads, I will use standard rate and multiply it with actual hours, no? Correct or not? That doubt should come. Did it come? Oh, it came. Excellent. Very good. I will tell you. That is correct. Excellent. Very good. If you got this doubt, it means you are conceptually very good. Bang on. Fine. I will tell you why we are using this. This is correct. I will tell you how we derived at this. I will tell you. For the time being, you just accept whatever I say. For the time being, you just accept. But yes, I will tell you. It's logical explanation. I will tell you. Don't worry about that. Fine. So absorbed overages. So everything, since we are writing in terms of hours, it is coming like this. I will tell you. In a while from now, I will tell you. But let me just finish the entire branches and tree, and then I will tell you what that is. For the time being, you just take it as absorbed fixed overages, standard hours into standard rate. Clear with this? So when I am multiplying the standard rate with hours, it means what? This is standard rate per hour only, no? Correct or not? If I am saying this is standard rate multiplied with standard hours, it means this is standard rate per hour only, no? Correct or not? That is the meaning. Fine. Now, what they are saying, there are two limbs to this. The left-hand side of the limb, left-hand side of the chart is called as fixed overhead expenditure variance. What do you mean by expenditure variance? Simple. Budget fixed overheads minus actual fixed overheads. Budget fixed overheads minus actual fixed overheads. Clear with this? What is the expenditure variance? How much more you have spent or how much less you have spent. I can compare the budget with actuals. Why? Because we are in fixed overheads. Correct? Are you clear with this? Now, you guys just tell me. On the top, what am I comparing? Absorbed versus actuals. Correct or not? Absorbed versus actuals. Correct or not? This is what I'm comparing here. Wait, I'll write it here. Absorbed overheads minus actual overheads is my fixed overhead cost variance. Correct, guys? Correct. On one side of the chart, I am saying fixed overhead expenditure variance is what? Budget minus actuals. Correct or not? Now, look at this. There itself, I told you, once again go back. Overheads are three types. Budget, absorbed, actuals. Correct or not? Budget, absorbed, actuals. Correct? Now, the topmost daddy, what is it comparing? Absorbed with actuals. Correct or not? Now, left side, one child, what is it comparing? Budget with actuals. So, which means the other child should do what? Absorbed minus budget. Are you clear with this? Balancing figure. Are you clear with this? And that is called as fixed overheads volume variance. What is volume variance? Very simple. Absorbed overhead minus budgeted overheads. Why, sir? Why should we do like this? Only then if you add the two, budget will get cancelled and you will get absorbed overheads minus actual overheads. Are you clear with this? It's a balancing figure. Are you clear with this? Guys, is it understandable? Now tell me, what is fixed overheads cost variance? Don't tell me under or over absorption. Tell me what minus what? Absorbed minus actuals. Fine. Absorbed minus actuals. And absorbed, I told you, it is standard hours into standard rate. Why? Logic, I'll explain. Fine. Right. So this is what your absorbed minus actual. Now split it into two. Expenditure variance. What minus what? Budget minus actuals. The balancing figure volume variance is absorbed minus budgeted. Are you clear with this? Fair enough. Easy, guys. Isn't this easy? Logically, can you get it? Because actually seeing this volume variance is where you will have a lot of concept. That is linked to your sales margin variance and all. There is something there. In sales variance, you will have total approach, margin approach, not there for your exam. For me to explain this, I need to prepare a reconciliation statement and show you. But right now, it's not required. That's why I taught this to you as a balancing figure. For the time being, you just accept it. At times, it's clever not to get too deep into the concept. It makes sense because it's not there in your syllabus. Had it been there in your syllabus, no mincing words. Definitely in final and all, this concept itself explanation will go for about 1.5 hours. This only volume variance itself will go for about 1.5 hours. So that's why I'm telling you, for the time being, you just accept. This is sufficient for your exam. Clear with this? Anyways, what does fixed overhead variance stand for? Under or over absorption. Absorbed minus actuals. Now left side of the chart, expenditure variance. Budget minus actual. So this guy should be the balancing figure. Volume variance is your absorbed minus budgeted. Are you clear with this? Now, so this is what fixed overhead? Fixed overhead what? Volume variance. Fixed overhead volume variance. So what is this formula? Absorbed fixed overheads minus actual fixed overheads. Okay, absorbed minus budgeted fixed overheads. And what is absorbed? This is nothing but standard hours into standard rate. Why? I am here to tell you that I will tell you. Clear with this? Fine. Now, this fixed overhead volume variance has further two limbs to it. Please don't look at the book and all. There are 3 limbs will be given. What is that? I will explain. The third limb I will explain. First, you should know this. Then you can know that. Okay? Are you clear with this? Fine. What are the 2 limbs called as? Fixed overhead capacity variance and fixed overhead efficiency variance. Fixed overheads capacity variance, fixed overheads efficiency variance. Now, these two are also logical only. But since I am not explaining you the concept of volume variance right now, what I want to do is, I just want you to just do something that I ask you to do. What you need to do here is, only one thing you need to remember. Only one thing, only one little thing you need to just remember by heart. I don't want to use the word by heart. You just need to remember. Can you just remember this one thing? AH into SR. Actual hours into standard rate. Okay. Minus whatever is there here, you do it. Minus budgeted overheads. Budgeted fixed overheads. Correct? And this will be what? The balancing figure. This will be what? The balancing figure, right or not? This will be what? Absorbed fixed overheads minus what? AH into SR. Correct or not? Can you remember in the entire subject? In the entire subject, I am asking you to memorize only one thing. What is that? AH. This alone can you remember? This alone can you remember? This alone can you remember? AH minus SR. Sir, then you mean to say it is illogical? No, it is logical, but it's not worthwhile explaining it. It's not there for your syllabus. That's why I'm not getting deep into it. Can we just make peace with this? Can we just make peace with this? This capacity variance alone, you just one thing, suddenly it comes actual hours. Clear with this? Actual hours into standard rate minus whatever is there on the top, left, right hand side. Clear with this? And this will be what? This will be the balancing figure. That is absorbed fixed overheads. SH into SR minus what? AH into SR. Are you clear with this? Can you remember this alone? Can you remember this alone? So what should you remember? AH. Only one thing means you can easily remember. So many things only difficult, no? In the entire subject, AH alone can't you remember? AH alone can't you remember? Trust me, I will not ask you to mug up anything else. Fine, AH alone, even if you see in your material cost and all, there will be some levels, stock levels. That also I will tell you conceptually only. You need not mug up anything. That also, promise I'm telling you, only this part. Fine? It's not worthwhile the explanation, that's why. AH alone. Correct? Now. Full. Come back. What is your fixed overhead cost variance? Come back. Tell me. Absorbed minus actuals. That is absorbed static, but standard hours into standard rate minus actual. Now branch it into two. Expenditure variance and volume variance. Expenditure variance. What and what? Budget minus actuals. So, what is your volume variance? Absorbed minus budget. Yes, clear with this? Now you just branch it into two. Capacity variance and efficiency variance. Capacity variance, one thing you need to remember. AH into SR minus whatever is there on the right hand side. Budgeted fixed overheads, and your efficiency variance is the balancing figure. That is absorbed fixed overheads minus AH into SR. Are you clear with this? Yes, are you clear with this? Is everyone clear with this? Yes. Now let me just come to this particular area. Sir, in that chapter, while doing overheads, you said overheads absorbed is nothing but standard rate, that is predetermined rate into actual base quantity. Correct or not? Now you are changing it in this area only. Why, sir? No. I'll tell you what has happened here. I will explain it with an example. Fine. So, and I'm not planning to take more time here. Just see if you are able to understand. Fine. Mostly I wish you understand. If not, just leave it there. Because this explanation is something that I'm doing for a conceptual knowledge. Regular batch, yes, we will be having all the time. I'll definitely do it. But fast track, we don't have much time, but I'm not going to omit this. I'll just tell you, maybe I'll take a few minutes time and I'll explain you why it is so in this case alone. If you're able to understand, well and good. If not, don't worry. From exam point of view, it might not be that important, but yes, maybe if I was in your position, I would have had a sleepless night had I not known this concept. So maybe for those who are really curious to know the concept, for them alone, yes, fine, you can take this as some extra bonus point. Fine. Now, just patiently listen. Hear me out. Just hear me out. Now, I want your participation, guys. Please participate. Now, I'm giving you an example. It's not necessary to note down. If you want to, yes, I'm not going to stop you. Fine. I'm giving you an example. First. Now, let's say the budgeted fixed overheads is rupees 1 lakh. The budgeted fixed overheads, guys, carefully listen. The budgeted fixed overheads is rupees 1 lakh. The budgeted output, let us say, is how much? It's 10,000 units. And let us say the budgeted hours in total is going to be 20,000 hours. Meaning what? For every unit, you can take 2 hours. Correct? This is the meaning. Correct or not? Correct or not? And they have also given you that the actual quantity is 15,000 units. The actual quantity is 15,000 units. Yep. Correct? Correct? Fine. Now, you tell me, carefully listen. When I am using production units methods, how many base quantities are there? 6. Under that, the last base quantity is what? Production units. Directly I am finding out the absorption rate per unit. I can do it in this sum, no? Correct or not? If I am doing it like that, what is the standard rate per unit? Per unit. How much is it? Standard rate per unit. Can I say it is 1 lakh divided by 10,000? How much is that? Rupees 10 per unit. Again and again I am stressing on this. Per unit. Correct or not? Correct or not? Correct or not? Yes. 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 Suppose if I am going by labor hour basis, what is my standard rate per hour? How much is that? 1 lakh divided by 20,000. How much is that? How much is that? Rupees 5 per hour. Yes, clear with this. And one more thing I want to tell you. Every unit, that is standard rate. Sorry. Once again, I'll just come up again. Standard hours allowed per unit. Standard hours allowed per unit. Every unit, how many hours you can take? How many hours you can take? How many hours? 2 hours. Correct or not? 2 hours. This data, are you guys understanding? This data, are you guys understanding? No. Now, let's say I want to calculate the absorbed overheads using what? Production units method. Formula. Absorbed overheads. Standard rate per unit into actual units. Correct or not? Actual quantity. Correct or not? Yes. So tell me, what is the standard rate per unit? What is the standard rate per unit? Per unit. 10 rupees. Correct? Rupees 10 into actual quantity is how much? 15,000. How much is this? How much is this? Rupees 1 lakh 50,000. Right. Now just carefully observe. This standard rate per unit of 10 rupees, how I got? Can I say it is nothing but standard rate per hour into standard hours per unit? Every unit, every hour, if I'm going in terms of hours, every hour I'll absorb 5 rupees and every unit requires 2 hours. That's how I got this. Correct or not? Correct or not? Madam, yes, you are understanding. You only asked this doubt, no? Yes? Are you understanding? Fine. So can I say this is nothing but standard rate per hour into standard hour per unit into actual quantity. I am just splitting this. Can I do that or not? Can I do that or not? Can I do that or not? You tell me, what is standard rate per hour? Tell me what's standard rate per hour? How much? 5. Standard hours per unit? 2 hours. Actual quantity produced? 15,000. Now wait. This is where the twist happens. Now, if I club these two, can I say actual production is how much? 15,000. Correct? For each of these 15,000, you should have spent how much? 2 hours. Can I call this as total standard hours? Can I call this as total standard hours? How much is this? 30,000. Correct? 30,000 into standard rate per hour, which is equal to 5. So now can I say that if you want to convert the production units method in terms of hours, it becomes standard rate per hour into standard hours? Madam, you're getting it now? And this is the logic for absorbed overheads. They are telling that standard rate per hour into standard hours. This is the logic. Are you clear with this? So always remember, only on the base quantity actually consumed you will multiply. But what they are doing here is they are converting the production units method into hourly basis, and they are doing it. Are you clear with this? Now you are understanding why in this chapter it's been done like this. If you want to take a snap, yes, you can do that. No problem. Are you clear with this, guys? Are you clear with this? Yes, is everyone clear with this? In case you are not understanding too much, sir, NSR, don't worry too much about it. Just leave it. Just leave it. Yep. Sorry? Standard rate per unit, budget overage lenda edukano. Yes, that's what we took. Units, if your units change, remains the same, but what and what you're comparing? Absorbed overage will change, Actual overage will not change, but absorbed will change, That's what you're comparing. Correct or not? Are you clear with this? Guys, are you clear with this? No. Fine, just leave it, make peace with this area alone. If you're understanding, well and good. If not, from an exam point of view, this is certainly not important. But conceptually, I just try to explain why it is SR into SH instead of actual standard rate into actual quantity. Why is it coming like this? I just explained it. Are you clear with this? Maybe this example you can note it down. Think twice in your house, and then if at all you get it right, then it's absolutely okay. If you're still not convinced, hit me up after the class. I'll help you out. No problems. Are you clear with this, guys? Fine. Done with this. Now, you guys tell me. So we will write this formula once again. We will write this formula for fixed overheads once again. Okay. So tell me what's the formula for fixed overhead cost variance? Standard hours into standard rate, that is nothing but absorbed, minus actuals. Correct or not? This gets segregated into two little babies. What are they? Fixed overheads expenditure variance and fixed overheads volume variance. Fine. Expenditure variance formula: budgeted fixed overheads minus actual fixed overheads. Your volume variance is what? Balancing figure. What is it? Absorbed, that is SH into SR minus budgeted fixed overheads. Correct or not? Now, this we classified it into two. What and what? Fixed overhead capacity variance, fixed overhead efficiency variance. Yes. Capacity variance. Formula. One thing alone I asked you to remember. What is that? AH into SR minus budgeted overheads. Correct or not? And this is the balancing figure. SH into SR minus AH into SR. This is what we saw. Clear, guys. Now, one more addition I will make. Last, final touch. Adukapra this concept, all concepts are over in this chapter. Let's be happy. Fine. One last thing. Now, in between, they are saying, one guy is coming in between and saying, add me also to the group. That is called as fixed overheads calendar variance. I will tell you what that is. Now, sir, if you add capacity variance and efficiency variance, it is exactly matching with volume variance, no? Correct? Suddenly, if you add someone, then it will not match, no? So, what this guy is saying, wait. I have a new concept called as possible fixed overheads. What is that? I'll tell you later. I have a new concept called as possible fixed overheads. What you do is, neatly, you just erase this. And what you do is, you say AH into SR minus possible fixed overheads. Now I'm telling, it will not match with the daddy, no? You say, wait, don't worry. I will immediately reverse it. How will you reverse it? Possible fixed overheads minus budgeted fixed overheads. Here itself it gets cancelled. Correct or not? This possible fixed overheads gets cancelled here itself. Yes or no? Guys, 1 second. Yes, this possible fixed overheads gets cancelled here itself, and again you get only budgeted fixed overheads. Correct or not? Are you guys understanding this? See, I have to resort to all these kind of stories because this is a highly conceptual area that's not relevant for intermediate. Had it been a final discussion, it would have gone like a proper discussion with concepts, but that is not the case. Yes, that is the reason. Clear with this? Fine. So, one thing addition, calendar variance. He is coming up with something called as possible fixed overheads, and I need to adjust. What will I do? So, in my capacity variance, I will say AH into SR minus possible fixed overheads, and immediately I will knock it off. Possible fixed overheads minus budgeted fixed overheads. So, because of this calendar variance, your efficiency variance will not be affected. Are you clear? It's an adjustment between these two siblings. Are you clear with this? Are you clear with this? Yes. What is possible fixed overheads? I'll tell you that, you don't worry. But are you clear with this alone? Yes. Yes. Shall we make peace with this part alone? I told you this AH you need to do, and this possible fixed overheads accommodation you need to do. But for that, the entire concepts I have explained. Clear? Clear? So one final time, tell me guys, what's your fixed overhead cost variance? Please, last time, and then you will go to the sum. So fixed overhead cost variance, absorbed minus actuals. Absorbed is what? Standard hours into standard rate. Fine. Now, branch it into 2, you get your what? Fixed overheads expenditure variance. Formula, budget minus actuals. So your volume variance is the absorbed minus budget, balancing figure. Now, this your volume variance gets branched into 3 people. Fine. Now, first one, fixed overheads capacity variance. What you should remember? AH into SR minus possible fixed overheads, immediate knockoff. Your calendar variance will be possible fixed overheads minus budgeted fixed overheads. And finally, your efficiency variance will be your balancing figure. That is SH into SR, absorbed minus AH into SR. Clear with this? Clear with this? Now you are able to understand, guys. Are you able to understand? Only in this segment, I asked you to remember certain things. But for this, everything is conceptual. This is also conceptual, but this is not required at this level. Are you clear with this? Are you clear with this? Shall we hit the sum? Shall we hit the sum, guys? Shall we hit the sum? We will just finish the sum. Now, once you do this, once you finish this sum, it's going to be very easy, and we'll obviously take a break. You need not worry about that. I'll give you a break. Yes, we will take a break. Once we finish the sum, that's all. We are done with this. Okay, clear with this? Now, before that, you tell me, for me to finish this branch, how many ingredients do I need? Now look at this and tell me how many ingredients. Go in the same order. SH, SR, actual fixed overheads, budgeted fixed overheads, actual hours, and then possible fixed overheads. Possible budgeted fixed overheads. Are you clear with this? 6 ingredients. So whenever you see this kind of sum, what you need to do, list out those 6 ingredients, plug and play model. As simple as that. Clear with this, guys? Yes? Shall we just get into this? Yes? Final sum. So, final sum. The last one. No matter how you start, finish it like Dhoni. Yeah? Sorry? You want to copy this down? Okay, fine. Just copy this down quickly. I've already given it in your material. It's okay, fine. Note it down. Not a problem. Make it fast. Just make it fast. 20 seconds. Make it fast. Okay, guys, so let's start. Okay, let's start. Fine. So this is the tree that we're talking about. Fine, this is something that I've already told you. Okay, and how to calculate possible fixed overheads, we will do it in the next sum. Okay, so let's hit question number 4. Yes, guys, so page number 27, take question number 4. A manufacturing company operating a standard costing system has the following data in respect of July 20 X1. Actual number of working days 22. Now, 1 minute, guys. 1 minute. Now, anywhere did we say anything about number of working days and all in this area? No. So, if at all this question gives you the number of working days, it is for that calendar variance. We will see it. Okay. It's for that calendar variance. Okay. So, always remember, if they are not giving you the number of days, then your volume variance will only have capacity variance and efficiency variance. In between, this fellow will not come. If they are giving you the number of days and all in the question, then calendar variance will also come. Then only the concept of possible budgeted fixed overheads will come. Are you clear with this? So that was one difference. That's one difference. How to do that, I will tell you. You need not have to worry about it. Fine. Next, actual hours worked. It's given. Why is it required? Actual hours. I asked you to remember, no? Actual hours. No, that's not efficiency. That's capacity variance. Oh, efficiency variance is balance figure. Capacity variance, left side. Okay, for efficiency also it's required, but you need to remember only for capacity, not balancing figure, right? Then units produced they have given. Then actual fixed overheads incurred they have given. This is what actual fixed overheads. Now the following information is obtained from the company's budget and standard cost data. Budgeted number of working days per month is 20. Budgeted man hours per month is 8,000. Standard man hours per unit produced is 10 hours. standard fixed overhead rate per hour. So this is standard rate per hour directly given. The question is 0.5. Calculate fixed overhead cost variances. Tell me first, you need not tell me the answer. What are the ingredients required? What are the ingredients required? In the same order. Standard rate. And throughout this chapter, we are going to do it only in terms of hours. Only in terms of hours. Standard rate. Standard hours. Then actual fixed overheads. Budgeted fixed overheads. AH. Possible budgeted fixed overheads. This alone I will explain when we come there. Possible budgeted fixed overheads. Fine. Now, standard rate. Standard rate, come on, tell me. What's the standard rate? One sec. Where have I given us? Okay, fine. Yeah, so standard rate, how much is it, guys? Standard rate, how much is it? Oh, sorry, I should have been generous. Okay, 0.5. How do you know? Given. Okay, fine, I missed it. Sorry. Fine. Standard hours. Standard hours. How much is the standard hours? 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 8,500. 8,500. Okay, any other answer? I mean, not getting this. Any other answer? Any other answer? Come on, guys. Come on, you can't take this much amount of time. Who all says 8,500? Raise your hands. So it means the others are still doubtful. Okay, fine. Down. I wanted to know how many are doubtful. If I ask, they will not raise. So that's why I asked you guys. Okay, fine. So tell me, why others? What happened? What do you mean by standard hours? What do you mean by standard hours? The hours that you can take for the actual production. How many units you have produced? How many units you have actually produced, guys? 850 units. And every unit you are allowed how many hours? What is the big deal in this? It's 8,500. No. 8,500 hours. How did you get this? 850 units. Each is allowed 10 hours. Correct or not? What? Correct or not? Yes, you're understanding this. Next. Actual fixed overheads. I will show my generosity. 3,600. No? Yes, 3,600 given. Given. Next. Budgeted fixed overheads. Also, I think I can. Is it given? Oh, it's not given. Okay, fine. What's your budgeted fixed overheads? What's your budgeted fixed overheads? Budgeted fixed overheads. Who all got the answer? No. Come on. 4,000. Okay. Any other answer? Why? What's the problem? What's the problem here? Now, wait. You tell me, guys. You tell me. This is what they have given you, the standard fixed overhead rate, meaning what? Budgeted rate. Correct or not? Budgeted rate is equal to budgeted fixed overheads divided by budgeted hours. Correct or not? Correct or not? Correct or not? Budgeted rate is how much? How much? 0.5 is equal to budgeted fixed overheads that I meant to find out. Budgeted hours is how much? Now cross multiply. Budgeted fixed overheads is 8,000 into 0.5. What's the big deal? What's the big deal? They will not spoon feed everything. It's a CA exam. A 10-mark question, will they simply give it like this? Will they simply give it like this? What's the problem, guys? It's direct, no? You need to think little, that's all. Okay, fine. If you have got it wrong, no worries. But take a red ink and write. Whenever you're doing it, take a red ink and write. So it's going to be what? There's going to be 4,000 rupees. How you got this? 8,000 into 0.5. 8,000 into 0.5. Yes? Are you guys clear with this? Don't think that, I didn't get it. It's okay. It's okay. But yes, now if you are learning it, it's good. It's good. Are you clear with this? Very good. So this was the logic you did. Yes, very good. And Rohini, you also did the same thing. And I think one more person answered. I think Madhu or Praveen. No? Yes, Praveen answered. Yes. Okay. Very good. Very good. Those who answered, very good. Others, please know that this is how it has to be done. Next, actual hours, guys. Actual hours. Actual hours, generosity only. 8,600. Yes, given. And then now let's come to possible budgeted fixed overheads. What is this possible budgeted fixed overheads? Now, you tell me guys, now I had planned to incur incur 4,000 rupees of budget overheads, correct? This is my budget overheads, correct? For a period of 20 days, correct or not? Correct or not? Correct or not? Now you tell me logically, fixed overheads does not move with my output. True or false? True or false? True. But can I say fixed overhead moves with my period? For example, if I am using this place only for 1 month, I need to pay 1 month's rent. If I am using this place for 2 months, I need to pay 2 months rent. In this case, I had originally planned this 4,000 rupees for a period of 20 days only, no? But actually, I am using it for 22 days, correct or not? So, I am revising the overheads. I am revising the budget overheads. I am calling it as possible budgeted overheads. Now, tell me how much it will be. Can I say this is nothing but 4,000 is for 20 days. How much will it be for 22 days? Are you clear with this? It's called as calendar variance. For the 2 days extra, how much you could have incurred, that cushion gets captured in this. So that's why, what is the calendar variance formula? Possible budgeted fixed overheads minus budgeted fixed overheads. So you are comparing these two. For the 2 days extra, how much is the thing that is allowed is what we are trying to track. Are you clear with this? Are you clear with this? So how much is this? This is how much, guys? 4,400, right? Are you clear with this? And this is exactly what I've given here. Possible fixed overheads is equal to budgeted fixed overheads into actual days divided by budgeted days. Are you clear with this? I've given the formula there only. Are you clear with this? Are you clear with this? So let me do the sum here only. Then, have you guys noted this down? This is what solution? This is the solution. Have you guys noted this down? Please note it down quickly. You guys have noted this down, right? You guys have noted this down. Shall we move to the next one? So what are we going to do now? Plug and play. Shall we do it? Let's finish it off quickly. 5 minutes and then break time. Yes, and then break time. Yes. Biggest motivation in life. Break time. Okay, fine. Right. So now first, fixed overhead cost variance formula. Absorbed overheads. Formula is standard hours into standard rate minus actual fixed overheads. Correct? 1 second. So this is the ingredients. Now look at this. This is 0.5 into 8,500 minus what? Minus actual fixed overheads is how much? 3,600. How much is this? Let's put the figure. 8,500 into 0.5. How much is that? 4,250. Yeah. So 4,250 I have absorbed and 3,600 is what I have actually incurred. Correct or not? Correct or not? Now when I'm absorbing more, what am I going to do? I will be recovering it more from my customers. Correct or not? It's a favorable thing for me. How much is it? How much is it? How much is it? 650. Yeah. 650 is what? 650 is favorable. Correct. 650 is favorable. Correct or not? 650 is favorable. In this case, under absorption, over absorption. Under or over? Over absorption. When you are over absorbing, it means what? Currently, you had accounted more cost. Now you are going to go and reduce the cost. Correct? And when you go reduce the cost, your profit will increase. And that's why it's a favorable balance. Are you clear with this? Under absorption, over absorption. This is over absorption. Over absorption means what? You have already accounted for more cost. Yes, now you are going to go reduce the cost. When you reduce the cost, profit will increase, and when your profit increases, it's a favorable variance. Are you understanding the logic here? Are you understanding the logic here? Now, let's get into the two other limbs of this. What and what? Hello? Fixed overhead, expenditure variance, and fixed overhead volume variance. Formula. Budgeted fixed overheads minus actual fixed overheads. Budgeted fixed overheads. Figure 4,000. Actual fixed overheads. Figure 3,600. You were allowed to spend 4,000. You have spent only 3,600. Favorable, adverse. 400 favorable. 400 favorable. On the other side, this is nothing but your, what is this? Absorbed, that is SH into SR minus budgeted fixed overheads. So how much is this? So you can just write the figure here. 4250 minus what? Minus what? So I am picking this 4250 from here. Directly I am writing it. Minus 4000. So how much is this? 250 favorable. Are you clear with this? 250 favorable. Let's take it as positive favorable. That's all. Since I didn't tell you the concept, here you take it as positive favorable. Clear with this? Clear with this? Now, this can be further classified into what? Fixed overheads, capacity variance, then fixed overheads, calendar variance, then fixed overheads, efficiency variance. Fixed overheads, efficiency variance. Capacity variance. Formula. What you should remember? AH into SR minus possible budgeted fixed overheads. Possible budgeted fixed overheads. AH into SR. AH is how much? 8,600 into SR is how much? 0.5. 0.5 into minus possible fixed overheads. How much is that? Guys, answer no. Everyone answer no. 4,400. Pick it from the top. Pick it from the top. We have already done it. We have already done this. Yes, you know AH 8,600. You know possible budget fixed overheads 4,400. Just pick it up here. So tell me 8,600 into 0.5. How much is this? 4,300 minus 4,400. This is going to be what? 100 adverse. Correct or not? 100 adverse. Now calendar variance formula. Possible budgeted fixed overheads minus budgeted fixed overheads. Figures you already have. Tell me how much? So this is 4,400 minus 4,000. So this is what? 400 rupees. Adverse, favorable. Right. And finally, this is what? This is your fixed overhead efficiency variance. SH into SR. That is absorbed overheads minus AH into SR. How much is this? 4,250 minus, you can pick this figure directly, 4,300. How much is that? 50. Adverse, favorable. What is this? Adverse. Are you clear? Now, if you add these three, 100 adverse, 400 favorable, 50 adverse, do you get 250 favorable? Yes, and that concludes our discussion on standard costing. Are you clear with this? Tell me guys, is it difficult? Is this chapter difficult? Absolutely not. It's all the hype that people have given. If you know it conceptually, you can definitely get it. I'm not saying that immediately you will get it. Go home, revise. Automatically you will get it. Go home and revise. That effort definitely you need to take. That goes without saying. I can't say that if you sit in the classroom, directly go to the exam. No. Without revision and practice, this subject will not come. That is the subject. Had it been any other theoretical subject or even accounts to some extent, I can tell you, because you've been seeing that accounts till your 11th standard. But costing is something that you're seeing for the first time in your life at this stage only, unless and until you have done your BCom and all that. So yes, it will be like this, but I'm telling you, you need to practice. Okay, clear with this guys? So just one final time and we are done. Trust me, we are done. I will give you, see, look. I still have 3 minutes, 15 minutes break, I still have 3 minutes. Look, the time is what? 5:12, 6:12. So the time is 6:12. Fine, 3 minutes I will take. After that, 15 minutes break we will take and then we will come back. Okay, fine. Finally, you tell me. I'll ask randomly, rapid fire questions. You should tell me. Material usage variance, formula. Standard quantity minus actual quantity into standard rate. Yes, correct. Who is responsible? Production manager. So within the bracket, standard quantity minus actual quantity, vella on the outside and into standard rate, because I'm not dependent on the other guy. Fine, very good. Material yield variance. Standard quantity minus revised actual quantity into standard. It's not standard rate. Sorry. It's standard price. Very good. Fine. Then your labor efficiency variance. Standard hours minus actual hours worked into standard rate. Correct? Fine. Very good. Then your fixed overheads expenditure variance, budget minus actuals. Excellent. Fixed overheads capacity variance, AH into SR minus possible budgeted fixed overheads. Great, guys. Excellent. Very good. So fine. We will break now. No, one more I'll ask. Okay, I was kidding. Fine. So yeah, we'll take a break now. So be here sharp at 6:30. We'll start with a new chapter. Called as service costing. Now guys, 10 marks, chapter 1, cost sheet. Your overheads plus ABC, 15 marks. And this chapter, standard costing, 10 marks. 35 marks already done. We are almost nearing the defense part. Service costing also, if we finish 10 marks, it will get over 45 marks there in your pocket. Are you clear with this? Have the confidence. All you need is practice. I'm giving you the direction. Go home, practice. Fine, guys. Let's take a break. Fine. Thank you so much. See you all at sharp 6:30.